All right, we're ready to begin. I'm Lee Wright, and I've served here at the State Board of Missions for 23 years and doing this stuff for 17 of that, let's see, no, 19 of that 23. 19 of that 23 years, and enjoy what I do. If you need me, I do work part-time, as I was talking about just a moment ago. In the back of your book, and I'll just point out this for just a minute, in the very last page, you have the resources, and you have our website, you've got my contact information, you have my cell phone number, and all the different ways to contact me. So if you call the office and I'm not here, which I'm mostly not here, but if you call the office and I'm not here, it's going to ring my cell phone. And so it's going to seem as if I was in the office all the time. But I'm not. And I work part-time and enjoy my work and enjoy what I do, want to be helpful to you and to your church. Today, I think that Mitch told me we have 37 online. He said some of those might be listening to the recording later, but I think we have 37 signed up online. And they're going to ask questions by typing it in, and Beth is going to be here, and she's going to feed those questions to us as we go. Now, Beth should get paid. In fact, I think I'll ask Dr. Lance about this. Beth should get paid hazardous duty pay for today. She should get extra pay for today because she puts up with these and has to endure these. And today we're going to see how Beth does on the quiz. So anyway, Beth is our ministry assistant in stewardship, cooperative program, and church financial resources, and we appreciate her so much. So she's operating our video and monitoring for questions and doing all that for us today. So if you are online, which those of you who are sitting in the room, you're not online, but if you are online, you have resources at alsbaum.org/CCS. Click on Administrator Resources. And then we're going to use another resource that comes from guidestone.org/compensation planning. And all that's one word. On my page on the screen, it separated it, but it's all one word, compensation planning. And then also, those of you who are online, if you will click in the Q&A section, you can ask your questions there. So I've put the questions for this quiz online also. So those of you who are online, I'll put it up here on the screen. So those of you who are online, you can follow along with us and see how you did as well. So on our tax quiz, let's do this together. Number one, true or false? They're all true or false. I thought I'd make it easy that way. On a minister's W-2, boxes 2, 3, 4, 5, and 6 are always blank. True or false? False. False. Why is it false? They don't pay Social Security tax. They may put an amount in box 2. Now, number 1 might be true, but they do have the option to withhold federal income tax, which would be in box 2. So 3, 4, 5, and 6 are always blank on an ordained minister. Now, today we're going to talk about an ordained minister serving a church, and that's how we're going to define minister. At some point, we'll talk about ministers who are not ordained, and we'll talk about that. But if we just say minister, you'll know that is, unless we say otherwise, that is an ordained minister. So for a minister serving a church, boxes 3, 4, 5, and 6 are always blank. You don't do FICA on an ordained minister. All right, number 2. Your church may contribute to the church retirement plan through Guidestone, and Guidestone and the State Board of Missions will provide some extra benefits. True or false? That's true. That's true. And in fact, I think those benefits were just paid out to ministers serving probably within a few days ago or so. I'll have to ask Julie exactly when that went out. But a minister, this one you don't have to be ordained. A minister serving a Southern Baptist church here in Alabama could get $210 a year contributed into their retirement account by the State Board of Missions. Number 3, true or false? A Holy Land trip given to the minister is not taxable, not included on the W-2. That's false. False. Number 4, sending a minister to the convention and his spouse as voting messengers is not taxable. That's true. That's true. And the spouse, as long as the spouse has a business reason to go, which in this case would. All right, number 4. Okay, whoops, okay. All right, 5. If the pastor takes a prospective family to lunch to talk about the church, their prayer needs, it may be included in accountable reimbursements. True, that's true. That is true. Number 6, a church may provide the use of a church-owned vehicle to the minister for business purposes tax-free. Number 6. That is true. That is true. Now, the caveat to that is it stays at the church. If he uses it for personal purposes, then you've got to account for those personal miles, and the IRS has ways of doing that. And accounting for those personal miles, he's either got to reimburse the church or the church adds that amount to the W-2. But if it stays at the church, he uses it only for business use, number 6 is true. Number 7, if your church cannot provide a group health care plan for your staff, you may possibly provide a health reimbursement to help cover the cost of their individual plan. That is true. You may do that, but you need a written document and you have to follow the rules. You have to provide it for everybody who works over 30 hours a week or more, and you cannot make it from salary reduction. Those are a couple of the rules that go with that. It's called a QS. The people that do that, all these people with these acronyms, QSERA, Qualified Small Employer HRA. Qualified Small Employer HRA is what that is. And you may do it, but you got to follow the rules. Number 8, church may reimburse a cell phone for the staff tax-free. True, that is true. Number 9, a love offering or bonus may be given to a volunteer as long as it's less than $600. It is not taxable. False. That is false. When you pay a volunteer, you just made them an employee, and you've got to provide a W-2. True or false? We may pay an intern $500 stipend for the summer, and it is not taxable. Same thing. That one's false. It is taxable. It does call for a W-2, but also it calls for all the other labor law things, minimum wage and all those things that we've got to take into account.
You may have answered this, but it says
Okay.
the main pastor and the associate pastor, both ordained ministers, claim the housing allowance.
Any ordained minister may claim housing allowance. So that would be pastor, associate pastor, could be a youth minister, could be some other who is ordained. Now, they could be licensed and serving in the functions of ministry, leading worship, leading the ordinances, leading the organization, and considered to be a religious leader by the church. But yes, They could have a housing license. Now, if a person is not licensed, not ordained, no, they don't qualify for housing. Good question. Okay, number 11. If the church does not provide an accountable reimbursement plan of business expenses, the minister may simply write them off on their own tax return. That is false. That is false. You cannot do that. Back in 2017 law went into effect in 2018. They eliminated employee unreimbursed business expenses. And as a minister of the church, I am an employee of that church. I cannot write off business expenses at all. At all. Now, well, let me give you one possibility. I do have other income, weddings, funerals, preaching somewhere else, or leading a Bible conference in some other church or something like that, and I get paid. Now, that is self-employment income, that part. And I could write off business expenses related to the self-employment income. But for my church income, I am an employee, and employees cannot write off unreimbursed business expenses at all anymore. So this one is false. This one is false. And if the church doesn't reimburse for those business expenses, the minister's just out of luck. All right, number 12. A love offering for a minister or staff is taxable and included on the W-2. That's true. Number 13, a love offering for a benevolence case is taxable, included on a 1099. That's false. That's false. As long as that person is not on staff, it is a gift, it is provided for a need, and it is not taxable. All right. Number 14, threshold providing for a 1099 is $2,000 beginning in 2025. That's false. It is true beginning in 2026, but for your 2025, it's still $600. And the ones that you're going to be working on right now, this month or next month, that threshold is $600. Okay, number 15. Overtime pay may be reported in box 14 of the W-2 for 2025, and of course it would be included in 3, 5, and 16. That is true. That is true. That's the guidance that the IRS has given so far. Now, I think for 2026 it may be included in box 12, but for now you list it as overtime pay in box 14, but it is subject to FICA, and so it's going to be included in box 3 and 5. So let's say that somebody made $12,000 and they had overtime pay worth $5,000. That'd be a lot of overtime. But say they had $5,000 worth of overtime, you'd put the $12,000 in box 1 for wages. You would put the $5,000 in box 14, label it overtime, and then it is subject to FICA, so in box 3 and 5, it would show $17,000 in those boxes. And then down under state wages, you show 17. Alabama granted overtime pay as not being taxable a year and a half ago, but that's expired and they let it expire. So, overtime pay for Alabama is still taxable income. And if you have overtime pay occur, you've got to pay it. You've got to pay it. You can't just say, hey, in a couple of weeks, just take off some time and we won't pay the overtime. No, if it occurs in that week, that 7-day period, you've got to pay it.
But Lee, is it just the time and a half? Is it just the halftime that you report, or are you gonna report the whole time that happened there?
I think you report
It was just the halftime.
I-
But you have to separate.
just the
You have to
halftime.
separate the two.
Okay,
I was
Okay.
at the tax conference last week, and that's what they said.
that's what they said.
I thought she told- I
Okay.
was in one too. I thought that's what they said.
All right.
You
Well,
have to do the math.
those of you who are using computer software, your computer software your company should be updating their software. It should be automatically doing that, and it should calculate it all for you. And so be sure and make sure that your software is up to date. And your company should be in touch with you about that. How many of y'all have already heard from your computer company, software company about this, or about any other changes that might be happening? Y'all have? What software do you have?
We use Paycor for all our payroll and stuff.
Okay. What about ACS or Shelby, or have you heard or not heard, or? Okay. Well, you should be hearing soon.
Lee, we have a question.
Okay.
It said, if the pastor is not paid a salary, can the church pay expenses?
Can the church pay?
Expenses?
You need to be an employee. Well, no, expenses. Okay, that's a tough question. All right, here's the question. The question is, if the pastor is not paid at all, he's volunteer, but the church does want to provide for his expenses. Yes, you may provide for expenses for a volunteer. However, what you're going to run into as a problem is mileage. For a volunteer, you can only pay 14 cents a mile, and but other expenses like going to a disaster relief event, or going to a convention, or something, going to a meeting, you could reimburse for those expenses, but you're going to get messed up on mileage, and so if you'll make him an employee and pay him something, then you could pay the full. Right, currently it's 70 cents a mile for mileage. And for a minister, you could pay them $300 a year if you wanted to. There's no minimum wage for a minister. And so you could do that. But basically the answer is yes. All right. Where are we? Number 15. Number 16, true or false? President Trump says that the new tax law eliminates the tax on Social Security benefits. Is that true or false? It's true.
He said it was going to.
It does. It does. Now, let me tell you how it does. It didn't really, not literally, it did not literally eliminate the tax, but the Congress provided a larger benefit for those over 65. So I guess really people who are 62 receiving Social Security, they don't get that benefit. But if you're 65 or older,
That's why I said it's not eliminating it on Social Security.
Right.
They're getting an extra
They're
$6,500 deduction.
get an extra deduction. It's $6,000 deduction. And the maximum Social Security benefit is basically $50,000. And if you wait until you're almost 70 to start receiving it, it's almost $60,000. And if you were in the 12% tax bracket, $50,000, 12% of that would be $6,000. And so you see that it covers a person in that situation, it covers it. Now, that benefit goes away when a married couple is above $150,000. But so it didn't literally remove the tax on Social Security benefits, but it provides the extra deduction that, in effect, does the same thing for most people. Now, there's higher incomes, it may not. And then people who are 62, I've not seen a word about it if you're 62. So I kind of think you're out of luck if you're 62. Yeah, I think it's 65 and older. All right. So anyway, I said true. Number one, it's true because he's saying it. And number two, it's not exactly the way that it worked out, but it works out to be basically the same thing. Okay, so that one is true. That one is true. All right, number 17. Number 17. If a person provides an offering designated to the pastor, it is tax deductible. That's false. That's false. Now, we may decide to do minister appreciation, but the church controls every bit of that. When we do it, how we collect the money, who it goes to. You know, maybe it goes to everybody that gets a W-2 on staff, and so forth. Then the church controls that. And so, but if I'm just going up to the treasurer and saying, hey, here's $100, I want it to go to the pastor, that's not tax deductible. All right, number 18. Ministers have a dual tax status. They're employees for federal purposes and self-employed for Social Security purposes. That is true. That one is true.
I have a question.
Yeah.
If you have someone on your staff who is not working in a ministerial role, say custodian, but yet they are bivocational and at another church.
Another church?
They are working as a minister and they are ordained. For our purposes, we still have Medicare and FICA wages and withholdings.
Exactly.
Okay.
For your purposes, you treat them like a regular employee.
Okay.
For the other church, they treat them like a minister.
That's for them. Okay.
Yeah, that's exactly right. We had that here at the State Board of Missions years ago. One person on our custodial staff was treated like a regular employee here, but he was a bivocational minister and had a church nights and weekends. Okay. All right, number 19. Church can change a designated fund simply by a vote of the congregation. That's false. That is false. And number 20, a church may borrow from a designated fund simply by a vote of the congregation. That's also false. Shouldn't be doing that. All right, so each one is worth 5 points. And let's see, how did you do? How did you do? So, how many of y'all had 80 and above? How many of y'all had 80 and above? Bunch of you had 80 and above. Good, good. How many of you had 90 and above? 90 and above. Had several, okay. Anybody have a 95? Okay, 95. Did you have 100? No, not 100. Good. Well, y'all did good. Y'all did good. That was good. And this test, I want you to be listening today for some of these concepts, because these are things that we're going to be talking about today. Now, I do want to say that, for example, that thing about overtime, that was temporary guidance from the IRS, and you can look that up on the IRS website. And then, really, for 2026, they'll have the official. You know, how is this going to be treated? What's it going to be doing? And of course, then they'll get it all official, and then it might change. Who knows? All right, let's take your other piece of paper, and that other piece of paper is 2526. Tax changes. And so there's a couple of these that we've talked about, but most of this we've not talked about.
That one's in the Guidestone.
Oh, okay.
Yeah, it's in your packet. It's inside your packet. All right. So the let's see, OBB, yeah, OB3, yeah, made some changes, and we're gonna see kind of this is basically what happened. And, you know, there may be, on down the road, we find out some other things. But this is basically what happened. So the bill provided that the 2017 Tax Cuts and Jobs Act became permanent. All those things became permanent. If they had not passed a bill at all, our taxes would have gone back to the old system that we had in 2017, and our taxes would have gone up. And so they made all those changes permanent. It also, one thing that I'm really glad about is for most taxpayers, 90% of taxpayers, it makes their taxes very simple. It's just basically how much did you make? How are you filing, like married filing jointly? Here's your standard deduction. Here's your tax rate minus the $2,000. Now next year it's going to be this year and next year it's going to be $2,200 for each child under 17, and basically that's the bottom line. I mean, you know, it's just real easy for most taxpayers. Now, if you're in a more complicated situation, your taxes may be just as complicated as always. But for most taxpayers, it made it a lot simpler. And that's one thing that I'm very thankful for. But it made all that permanent, and that in doing so, that also made it permanent that employee unreimbursed business expenses is not on there. You can't claim it, and a lot of ministers are surprised to hear that. Standard deduction, they actually made the standard deduction higher again for 25. So it went up to, for 25, it went up to $15,750 and $31,500 for married filing jointly for 25. And then for 26, it goes, now 26 is just going up inflation adjusted. So for a married couple, it's $32,200 for 26. And so they gave us a little bit larger standard deduction. And so that gives us all a little bit of a tax break. The child tax credit was increased from $2,000 to $2,200. And the other part of that is they increased the amount that is refundable. $1,700 of that money is refundable. So if you get your taxes, your federal income tax, if you get it all the way down to zero and you have, 7 children under 17, you're still going to get some money back. For a non-refundable credit, you get your taxes down to zero and that's it. So like, let's say, I can't, was the $7,500 for car, I don't think that one was refundable. I don't think it was. So I may be wrong on that, so don't, because I haven't looked that up. But let's say you had that one and you got your taxes down below zero in that one, you would just end up at zero for federal tax. You wouldn't get money back. But there's an increased amount that is refundable on the child tax credit. So if you have children under age 17. State and local tax deduction was increased from $10,000 to $40,000 possible. The estate and gift tax, now I know this is the one that everybody's just dying to hear. It went up from $13.9 to $15 million. So I know you got a sigh of relief on that one. Everybody okay? Doing okay? All right. The full $6,000 deduction is available to individuals. This is for senior bonus deduction. Bonus deduction for seniors 65 and older, and for people making up to $75,000, or for a married couple making $150,000. So you each get that deduction. And so for a married couple who are both over 65, you're going to get an extra $12,000. So that's really neat. And of course, the idea was to eliminate the tax on Social Security benefits. They didn't actually do that, but in effect, they did for most taxpayers. There are Trump accounts for children born in, quote, Trump accounts for children born 25, 20 through 28, and there's going to be $1,000 deposited for that child born 25 to 28 into an account that is going to mirror probably the S&P 500 or some kind of index fund. And so it's an investment. That child can't do anything with it. I think they can use it for college. They can use it if they, have still, and parents can contribute to that account also. And it grows, and then they can use that money for college, or they can use that money like for a down payment for a house or things like that in the future. They can't touch it. I guess they can't touch it until they're 18, or that's what I understand so far. Now, I'm going to say that in regards to a lot of these things. This is what I understand so far. We may get down the road and we may have a little different understanding of some of that. All right. For buying a brand new car, you can deduct up to $10,000 worth of interest on your tax return. It has to be brand new, and it has to be American made. It has to be brand new, and it has to be American made. So used car won't qualify. Now, what is American made? A lot of them. A lot of them. So like Honda is made in Ohio. Honda's also made here in Alabama. Toyota's made here in Alabama. There's some of the BMWs in South Carolina, but I think a lot of the BMWs are not. So it's going to depend on what car you buy. It's got to be new, and it's got to be where the final assembly point is in the United States. And I'm thinking, I'm not sure about this, but I think those vehicles that are a part of the North American trade agreement count. Like if final assembly was Canada or final assembly was that northern part of Mexico, I think those count. But anyway, don't hold me to that because I haven't actually seen it in print. But it's got to be American made. Final assembly point.
Well, I have a question that we missed. I'm sorry.
Okay.
It says, what if both are not 65 years old?
Okay, if both are not 65, then one would get that $6,000 extra deduction. The other would not get the extra deduction until they're 65. All right? Good question. All right. There's a tax break on tip income and overtime pay, and those have limits. Overtime pay is up to $12,500. Most of us as churches, we don't pay overtime, but and we usually have a policy, we do not pay overtime. But you need to know that if overtime occurs, you are required by law to pay it. So be sure and do that if it happens. And then the EV credits are going away. For electric vehicles, it's already gone away. It was the end of September. For things that you might do to your home, like solar panels and stuff like that expires at the end of this month.
And those two are still subject to being able to itemize?
Yes. Well, now you have a credit, but you're going to have, I don't think you have to itemize to have those credits. Not for the credits, but you're going to have to make enough money that it's going to do you some good. You're going to have enough taxes, like $7,500 credit. If you bought an EV before the end of September, you're going to have more than $7,500 in federal income tax that you owe, and I mean owe for the year. not that you owe at payment time.
At the overtime and tip, that's a deduction, though, not a credit on those two.
Overtime and tip would not show up as taxable income. Taxable income. Somebody asked me this question, and I thought this was a brilliant question. May we, as a church, may we provide tip income so that it wouldn't be taxable? The answer is no. We can't do it. It's in those professions where tip income is a normal thing, and that's. So when you do a love offering for your staff and ministers, that's not a tip. It's not a tip. It's going to be taxable. All right, charitable deduction for non-itemizers. That's going to begin in 2026, that you can deduct $1,000 without having to itemize. $1,000 of charitable giving without having to itemize. And most of us can't itemize, and so we'll have that $1,000. And I believe that's $2,000 for a married couple filing jointly. So, but that does not happen 25. We won't be able to count it on the taxes that we'll be doing in April. It'll be for 2026. And then 1099s, the threshold for 1099s beginning in 26, not 25, but 26 goes to 2,000. For 25, it's still $600 for a 1099. So, bottom line for the church is that our procedures, W-4, how we do taxes, how we do the W-2, those kinds of things are going to be essentially the same that we've been doing for the last 7 years. If Congress had not done anything, we would have gone back to the old system, and on your W-4, you'd have those personal exemptions and deduction and standard deduction and all that stuff. And so we still go by the system we've used for about the last 7 years. So bottom line for the church is it's not going to be too bad, not going to be too complicated, not a lot of changes that are going to affect the church itself. All right?
Is the 1099 for the state, is it amount going to change?
I haven't heard a word. Knowing Alabama, probably not. Alabama, well, like for example, I wish that Alabama would recalculate the taxes so that you'd have the same standard deduction as federal, like $32,000 for a married couple, and just recalculate the taxes where you pay the same tax. But see, right now, we as Alabamians, we do need to keep up with itemized deductions. Most of us in this room are not going to be able to itemize, but you're going to be able to itemize for Alabama. And so you still got to keep up with that paperwork and track it. So I wish that Alabama would now they do make a lot of things the same as federal, but when federal changes and Alabama doesn't change, they might not get around to changing it. They might not. I haven't heard a word.
I will say the last several years, Alabama's just said send a copy of your federal 1099 forms.
Okay.
So they may.
So maybe.
I don't know, but they may.
They may.
Just send a copy.
Yeah.
So.
But for 25, it's still the same, and obviously be the same for Alabama for 25. All right. Let's take a 5-minute break. All right, let's get started back again. And we're going to be on page 103 of your book. Now, if you are online, we posted the book, and the page numbers, like if you look in your computer, the page numbers are going to look different, but if you look at the bottom of the actual print, the page numbers should work out to be the same. But page 103, year-end procedures. Now, we had a couple of questions about designated funds. And so if your church sets up a designated fund, let's say building fund, for example, and you set up a designated fund and you allow people to give to that fund, you have made a promise to your people that that money will be used only for the designated purpose. And you cannot borrow from it. You can't just take a vote and change it. There is a two-step process that you can do. You can take a vote of the church to change it, and you get permission from the members. But that's almost impossible to do. So be very careful with this and do it correctly. Now, so that's money we allow members to give to a certain designated fund. But if we as a church set up a designated fund, let's say we want to set up an emergency fund for the church, a contingency fund for the church. And so our stewardship committee, they're going to move $1,000 a month each month from general budget to this designated fund for contingency. And they're going to move $1,000 a month until we get to a certain level, maybe 3 months operating expenses as an emergency fund. And your emergency fund that you need depends on factors like how much snow do you get. We can pretty well, in Huntsville, we can count on having a snow day sometimes. Or how many hurricanes do you get if you're in the south part of the state? Or how old are your roofs? How old are your air conditioning units? Maybe then you need more of a contingency fund if you've got a bunch of those that are very, very, very old. So anyway, you determine the number. You determine, and the Finance Committee is going to put $1,000 a month into this fund. Now, that money, the church can vote to do anything it wants to with that money. And move it back or move it here or move it there. It doesn't matter. The church decided that. And so you didn't make promises to your people that we're going to, that we're going to use that money only for that purpose. You see the difference? Everybody okay about the difference about those kinds of funds? All right, yes.
Okay, so we have a couple, and this predates me, called memorial and love offering.
Okay.
And since I have been doing this, a member writes a check, and it's in memory of so-and-so that just passed away.
Okay.
We've been debiting cash and crediting memorials.
Okay, and have you used any of that money?
No.
And really, sometimes with that, they'll request, I would like in memory of my father, I'd like for it to go to the building fund.
Right.
Or then you'd put it in the building fund. To me, memorial fund is meaningless because we don't have a clue what they wanted it to go to. And maybe they didn't want it to go into anything. They just wanted it to go to the church.
Okay.
And so my thought, you can use that money for anything, because it wasn't designated to a specific purpose.
Should it have gone to just general contributions?
It could.
Just noted on there in memory of.
Yes, it could have gone just to your general fund.
Okay.
Yeah. And so I think you can use that money any way you wish.
Okay.
What if it's in book entry only and not an actual account set up?
Well, that's what we're talking about. We're talking about book entries. Now, at my church that I served, this is going back 45 years ago, we did have a checking account for all of our designated money. It was a separate checking account. We had, it's funny to think about today, we had a checking account that was labeled tax account to make sure that we had the money to pay the taxes and we didn't run out of money. We had an account called building fund, and we put that money actually in that account so we make sure that we didn't spend it on something else. We had an account called designated, which was all the designated funds. We wanted to keep that separately in a separate checking account. And but these days that you don't have to do that. It's just on your bookkeeping. And you could operate the entire church with just one checking account if you want to. And it's just a matter of, so when I talk about designated funds, we're talking about a function of accounting, not necessarily that you actually put it in a separate checking account, unless you want to. Yes?
One more question. On a designated fund, let's say it's your building fund, and you built your building, and you have $3,400 left over.
Okay.
The project is over with. What do you do with that leftover, and what do you do when you realize 15 years down the road, oh, we didn't get rid of that $3,400?
Okay, good question. We had money left over from the building project. It depends on how you talked about your building fund. Our pastor, talking about 40 years ago, he was very, very wise, and he says, now folks, when we talk about building fund, and we were building a brand new sanctuary, and he says, now when we talk about building fund, we mean whatever the church needs to do next. And we might need to remodel the preschool before we do that. We might need to add parking before we do that. We might need to do this. So building fund means whatever we're going to build, refurbish, repave, whatever next, anything.
Can you go to maintenance on the building after it's built?
It really depends on how you talked about it. If you said new sanctuary fund, I think you're limited to new construction. If you just said sanctuary fund, I think you could use it for maintenance. So how did you talk about it? How did you talk about it years ago? Now, one thing we're going to talk about later this afternoon, when we talk about designated fund just a little bit, the Attorney General, there's a new law, well, new to us, the Alabama Baptist Foundation told us about it. We didn't know about it. But there is a law that if it is less than $50,000 and if it's been on your books for 10 years or more, and it's become impractical, impossible, or illegal to use it for that purpose, you may change it with the vote of the church. I've got the wording in the book. I'll show you that when we get to that point. All right, so if your designated fund is something you allowed people to give to, and you've made a promise, we're going to use it for that, then you can't go back on your promise. But if it's something the church moved or the finance committee moved for a purpose, then you may change that at any time. All right, let's talk about year-end procedures. Page 103 in your book. And this is an article by Richard Hammer. Actually, Elaine Somerville edited it this year. The article is about the same each year with certain additions each year, and moving some things around sometimes. But you can find it at churchlawandtax.com. Churchlawandtax.com. You'll find the whole article, which has a tiny bit more than what we're going to say in this session. And while we're at it, let's note those names. Richard Hammer is the #1 author in terms of church and clergy and tax and law in the nation. And so if you see something by Richard Hammer, you know that it's good. Frank Somerville and his wife Elaine Somerville, they are top-notch. They are some of the leading nationwide. He's an attorney, she's a CPA, regarding church and tax and things like that. And she wrote a book on compensation that's real good. There's some others like Michael Batts. If you see that name, if you see these names, you know that you've got an article that is good. I have seen some articles that are not good. They're not accurate. They're relying on information. There was one article I read, it was relying on information going back to 1955, and that information was now out of date because of a newer law that changed all that. So So be careful what you read. And if you read those people, you know that you're reading good stuff. But so, number one, now is the time to make sure that your ministers, your ordained ministers, have housing allowance. Make sure that they have it set up. Make sure they've requested it. Make sure that that request has been approved. You cannot do housing allowance retroactively. Now, you can change housing allowance during the year, but you cannot make it retroactive back to the first of the year. And you may use a wording in your housing allowance. This housing allowance is good for 2026 and all future years until changed. That way, if you ever forget, you've at least got the previous year's amount. All right, procedure is that the minister makes a request, the church approves that request, and in many churches, if it's a small church, it's going to be a vote of the church. If it's a larger church, and when I say larger, that might be 100 in attendance or more, that it might be done by the finance committee, it might be done by somebody else, the deacons or someone who approves those housing allowance, but somebody's got to approve it. Officially, on behalf of the church, somebody has to approve it. All right, now, number two, now it's time to do W-4 forms. And if you are an employee of the State Board of Missions, we're doing that this week. And we've got to get our W-4 and our A-4 forms done. We do that every year without fail. And it's real simple. It just works like clockwork here. It works so well. If you don't turn in your W-4 and A-4, what happens? You don't get paid. You don't get paid. It's amazing the compliance that happens with those W-4 forms when that's the rule. And so it just works real well. But now's the time to do your W-4. It's a good idea to do it every year because things change, their situation might change. Maybe they get married, maybe they have a baby, maybe a spouse dies or something where their situation changes, and so it's always a good idea to do those forms.
If they, I see where it said withholding is optional, will they still be subject to underpayment penalties?
For a minister? Yeah, and it is the minister's responsibility to make sure that enough is withheld. And I talked to a minister one time, he didn't pay a dime in all year long. And he said, I'll just do it April 15th. And I said, well, you can do that, but you're going to get an underpayment penalty. So ministers, you either have to do one of two things. You've either got to send in quarterly tax payments, or you have your church withhold federal income tax, and you have them withhold every paycheck. And you figure out, on your table, you have a 2026 minister estimate of tax. We're going to go over that briefly in a minute, but that'll help your ministers estimate. They need to take that estimate and divide it by 4, send that in each quarter, or divide it by the number of pay periods you have, and you withhold that as federal income tax. So you can, a minister can and will have an underpayment penalty if they don't withhold enough. Okay, so the W-4 form, you should be familiar with it, very simple. Your name and address and stuff like that. Second is your filing status. Step 2 is what if you have multiple jobs in the family, like your spouse works or stuff like that. The easy answer on that one is check this box, and we're going to account for half of the standard deduction for a married couple, and that way, if you count the deduction as a married couple and your spouse counts the deduction as a married couple, then when you get to your tax time, you're going to be messed up. You're going to have way, way, way too little withheld. So checking this box, if you've got husband and wife both working, or maybe the one of you's got 2 jobs, you check that box. That'll help you to not pay too little. And then, do you have children for child tax credits? Step 4, do you want to add extra withholding if you wish, and then just sign and date? Now, the estimated form, we're going to go over that. Well, let's go ahead and go over it just a little bit, just a tiny bit for 2026. The minister will take, and that's also on your table. For those of you who are online, the 2025 form is there under CCS Administrator Resources. 26 form I just did it yesterday, so it has not been posted yet, but it will be in the next few days.
I emailed all of that stuff to you.
Oh, good, thanks. So, take your salary, but not housing. Add in any other taxable income, like you got a bonus or love offering, or add in other kinds of income, and then you get your total taxable income as a minister. We're going to add in the spouse's income here. So you get your total tax subject to federal income tax. Don't include the housing allowance. Take that amount, and first you subtract, if you're married filing jointly, you subtract 32,200. You get that result, and then you multiply that by 0.12, 12%. And I skipped the 10% bracket. My goal was to get this sheet to be one page only. If we were to really do all the brackets and all the possibilities and everything like that, it would take at least 10 pages to do this. So, but this is going to cover most people, and it's going to estimate slightly high. The most it can be high is about $400, about. And it's going to estimate slightly high because I skipped the 10%, went on to the 12% bracket. So you multiply, after you subtract the standard deduction, then you multiply that by 12%. That's going to be your federal income tax. Then subtract for 26, $2,200 for each child under age 17. And then that's going to be your tax. Then down under, and this is your family income tax. Then down under the SE calculation, the self-employment calculation, that one is exact. It's basically, well, it's 15.3% tax, but it's not applied to all of your income. It's applied to 92.35% of your income. And so that is an exact calculation. You add the two numbers together and you get your total tax as a family. What's going to be our total tax? Then you come down and you subtract the federal withholding on the spouse's pay. Not Social Security, not FICA, don't do anything with all that. Just how much is the spouse withholding federal income tax on an annual basis? And then you arrive at what should the minister withhold, or what should the minister divide by 4 and send in as quarterly payments. Now this form, it's got 2 mistakes on it. Number 1, I skipped the 10% bracket. Number 2, I did not go on to the 22% bracket. And this form, if you've got housing allowance, you can get up to about $140,000 as a family income, without moving into the 22% bracket. And so if you, as a family, if you make more than that, you need to account for the next brackets. But for a lot of people, this form will get you close and it'll be a pretty good estimate. Okay, any questions about this form? All right. So that'll help your ministers to estimate their taxes. Okay. December is a good time for employees to complete salary reduction agreements. They're now called contribution agreements for a church retirement plan. And they can be changed at any time, but it's just a good time to do it. And you really ought to do your salary reduction going into retirement as a percentage, not a dollar amount. You know, if we take out $100 a paycheck, and then 10 years later we're still taking out $100 a paycheck, and that might not be enough coming out of your paycheck. Well, it probably isn't. Probably wasn't when you were doing it. But if we do it a percentage basis, and you'd really like to get to 10 to 15% of your salary going towards retirement, is where you'd like to get. So if you're not there, let's say you're at 2%. Well, next year, for 26, make it 3%. Later on down the road, make it 4%, and so forth. And I like to see the church match. So, if you do 4%, the church will do 4%. So it's best to do it on a percentage basis. Then as you get raises, it automatically changes and changes with you. So now's a good time to do that. And also here at State Board of Missions, I just dealt with that on mine today. So we'll be doing, all of our employees will be doing that this week. If you have flexible spending accounts, you've got to get that done before the end of December. Anybody have any flexible spending accounts? Okay, this is the one that if you don't use it, you lose it. You set aside a certain amount of money, comes to you tax-free, but if you don't use it, you lose it, and you could use it for medical. You can also set up one for daycare, for childcare. Number 3, staff Christmas bonus. You've got to make sure that those are included on the W-2. And if you are, let's say you give your bonus to everybody, including the non-ministers, and you give it to everybody, you've got to at least deal with the FICA. So if you wanted them to have a $500 bonus and you write the check for $500, for those non-ministers, you've got to deal with the FICA. And so you're going to have about $75 to deal with. And so if you don't run it through payroll and take out at least the FICA, then the church is just going to have to eat that. So if you really want to run it through payroll and you want them to have $500, make the bonus like $575 or so, in order that they end up with that size check. Is there anything we can do tax-free? That's one of the most common questions I get, although I've said it so many times that I get this question less than I used to. Is there any way that we can give our staff anything tax-free? Is there any way we can do that? And basically the answer is no. When they are your employees, any money that you give them is taxable. And so there are some things called de minimis. This is in publication 15B, IRS publication 15B. They're called de minimis. That means they're so small you don't have to worry about accounting for them. And so this includes coffee and donuts, Cokes occasionally in the office. It includes occasional use of the church copy machine for personal purposes. It includes a staff meal to celebrate birthdays and anniversaries and stuff. Now, can we have staff meeting and go out to eat and count that as a business expense? No. But you can do this sometimes, and we do this at the State Board of Missions. You celebrate those birthdays and anniversaries and work anniversaries and work accomplishments, things like that, and you may provide a meal for your staff. A meal to keep an employee on the job as overtime, flowers given to employees, ham or turkey at holiday time, occasional entertainment ticket or sporting event ticket, and cell phone used primarily for business purposes. Those are the things that you can provide tax-free. Notice that they're tangible things. They're not money. They're not money. And then there with that in IRS Publication 15B, it says that cash and cash equivalents are never too small as to be accounted for. So if you give your employees gift cards, you really should count that as taxable income. All right?
What if you recognize volunteers in the church and you give them a $200 gift certificate, you just made them an employee?
You did. You did. In fact, Elaine Somerville is going to say that. Well, in fact, that's this slide. Gifts to volunteers, monetary gifts to volunteers should be avoided because you just, and that was one of the questions on the quiz. You have a volunteer pianist and then you give that $500 at Christmas. And you think, well, it's less than $600, so we don't have to do a 1099. But that person would not be a contract worker. That person would be an employee because you're telling them what time to be here, what time they're going to get finished. You're telling them what to play, when to play it, how to play it. They're using the church instrument, the piano. All those things point to employee. And so if you give your volunteer pianist a $500 bonus at Christmas time, you just made that person an employee, and you got to give them a W-2. So we need to avoid giving volunteers monetary gifts. Give them the things that are listed there under de minimis: a ham or a turkey or flowers or sporting event tickets or things like that. Okay. Yes.
What about one of our ministers, if he just bought like his volunteers and his ministry, gift cards, like $5 gift cards or whatever, like Chick-fil-A.
Yeah.
If you want to use his MRE, I guess his ministry related expenses.
There's a lot of ministers that I know, well, many, I'll say, who do that sort of thing, $5 gift card for volunteers. They're not worried about it. It's not exactly what the IRS says, but I think most people would not worry about it.
I just been turning a blind eye to it.
Yeah, that's right. And State Board of Missions used to do that for volunteers, but they've stopped doing that for volunteers. Okay, now W-2, if you have 10 W-2s and 1099s total, you must file your W-2s electronically. And you might as well go ahead and do it. That day's coming, and where you got to do it anyway. So get ready to do that. And it's easy. Once you get it set up, it's easy. Number 4, a notice to donors. And you'll want to notify them of several things. Remember to have your year-end gifts in by the 31st. What day of the week is 31st this year? Thursday? Wednesday? Oh, yeah, that's right. It's Wednesday. I think it is Wednesday.
31st, yeah.
So, tell them, please have your gifts in by the 31st. If you bring it after that, we cannot count it this year. We've got to count it next year. And so notice to donors, and then also a notice to donors of please wait to file your taxes until you receive the statement from the church. Please wait, because there is a way that if they file their taxes before they get the statement from the church, and if the IRS audits their gifts, those gifts can be denied. Even though they actually did the gifts, the IRS is not disputing that the money actually was given, but just that it wasn't done right, and so we're going to deny all of it. That has been done, and it's been upheld in tax court. So let your donors know, please wait to file until you get your statement. Or you could say it this way: if you're an early filer, please see our treasurer, or somebody like that. So we get that statement to you before you file. We'll talk about that when we talk about contributions. And it's good to do an education piece. There's a lot of good ways to give. We give from our income, but we are not very good at giving from our assets. So stock, you could give in your will. You can give in a lot of different ways. And it's good to provide educational statements about that. And church law and tax has an excellent one. It doesn't cost very much. The last time I looked at the price, it was about $16 either per 100 or $16, and you just bought the right to print it yourself. So very, very inexpensive. It might be $20 by now. I haven't looked at the price in a while, but very, very inexpensive. The year-end contributions, it's got to be physically received by the 31st, or it's got to be postmarked 2025. Postmarked 12/31, even though you didn't receive it in the mail until a couple of days later. If the check is backdated to 12/31, but you didn't get it until January, that doesn't change a thing. It's still a 2026 gift. And now electronic transactions, they happen the moment the transaction happens. And you should see a transaction date and a posting date, even though it didn't post until a day or two later. But you go by the transaction date. Okay, and be sure on all your contribution statements, make sure, absolutely, positively, yes, that you've put that wording in there. No goods or services were given in exchange for your contribution. That's another way that contributions can get denied if that wording is not there. And so you put it on the statement. If you send a letter to somebody because maybe they give one time, maybe they're out of town and they just give one time, or some reason that you just did a letter rather than their normal contribution statement, make sure that's on the letter. So however you do a acknowledgement, make sure that acknowledgement is saying that, as long as that's a true statement. Number 5, business expenses. Make sure you have an accountable plan. And if you've had an accountable plan, you've reimbursed your staff all this year, nothing, you just file those reports, nothing happens. It doesn't go on the W-2, it's not taxable, you're in good shape. And they're in good shape. But make sure, and if you don't have an accountable plan, now is the time to start. You need to do that, and your church needs to reimburse for those business expenses. Number 7, classification of workers for IRS and Department of Labor. You could have had a contract worker that you realize, hey, this person really is an employee. Like, let's say that you gave your pianist a 1099. Well, that's wrong. And so you should be giving your pianist a W-2. So now start classifying them as an employee and provide the proper W-2. About Department of Labor, let's say that you've got a daycare and you've got a daycare director and you've been counting that person as an exempt employee. They are exempt from overtime. And you've been treating that employee that way all this time, and you realize, hey, they don't make $35,000, so we've got to treat them as a non-exempt employee from now on. And some of you could have been treating your church secretary, your custodian, other people as exempt employees who who really aren't exempt, and now is the time to change that and make sure you treat them properly. So exempt, typically in a church, your exempt employees are your ministers. Don't have to be ordained, but your ministers, those serving as a minister, are exempt no matter how little they make, no matter how part-time they are. Those ministers are exempt. But in a church, typically all your other employees are not exempt. Now, you might have a daycare director. That's the most common other exempt employee. Does anybody have a person you've been treating as exempt and you're not sure? Anybody have a person that you wonder about? Okay. All right. Make sure ministers are properly classified about their Social Security. And so if they are an ordained minister, and I put on this time, no, I put it actually in your book, that you're not supposed to do that. There's actually IRS code that an ordained minister serving a church is supposed to be treated as self-employed for Social Security purposes. There are some ordained ministers who say, can't you just treat me like a regular employee? And you really are not supposed to. You're violating IRS code to do that. And then also, if you do that, and if you give them, if you do both, if you do FICA and housing allowance, that's a red flag on the W-2. The IRS should find that. If you did FICA but no housing allowance, you might get away with it, although that's not what the IRS says you're supposed to do. But Elaine Somerville said, incorrectly classified for Social Security and Medicare jeopardize the ability to receive the tax-free housing allowance. Okay, number 8, voluntary withholding. Your ministers may do voluntary withholding. Your other people, they don't have a choice. You're going to do withholding. And so now's a good time to set that up if your ministers have not been doing it. Review your payments to independent contractors and get ready to send a 1099 if it's $600 or more. And then number 9, order IRS publications. It'll take a while for you to get them. And then before you close out, do these things, and they're listed there in your book, until you've made backups and place those in a secure location, run your general ledger reports, reviewed the W-2 information, and you're ready to do that on your W-2s. Check your wage reports and check figures. And when you get ready it's a good idea to start thinking about what the W-2 is going to say. And a way to double check that for your regular employees is that what you've sent in on your 941s for Social Security and Medicare should be twice, within a few cents, should be twice what you took out of their check every week. And what's on the W-2 is going to be what you took out of their check. What's on the 941 is going to be both, what came out of their check and what you sent in quarterly. Also, don't do your last 941 yet. I used to get people all the time, on January 3rd, they'd already done their 941, they found a mistake. Well, now we've got to do 941X. So just wait, hold that 941. You don't have to turn it in yet. And make sure that you've got all your information correct and there's no mistakes. Then send in that last 941. Prepare for 26 and update your chart of accounts, update payroll, and things such as that. After the last payroll, update that. And then here's a very important update. If you have disability insurance, and it's a good idea for you to provide disability insurance. It's not all that expensive compared to well, especially compared to medical insurance. And if you provide disability insurance, that disability insurance is calculated on how much salary is it and how old is that person. How old is that person? Did you know that the premium for disability insurance actually goes down a little bit in those last years? Because they're only, typically disability is only going to pay to like 65. So, you know, when I'm 64, disability insurance doesn't cost as much because I've only got 1 year to be covered for. But it's based on those two things, salary and how old is that person. So every year you need to update their salary information with your disability coverage. Also, if you have retirement that is based on percentage, then, you know, like the church contributes 5% if you do 5%. The church does 8% if you'll do 4%, or something of that nature. Then you're going to update your salary information with your Guidestone retirement plan, so that they know how much, you know, how much you're doing. You're going to update those numbers. Number 14, your deadlines. Most things, the deadline is January 31st. We got to get that done. And here's your some more deadlines, and then your dates for your 941s going on into 2026. And then now is a good time to, you know, discard things and use a shredder for certain things. My church, actually copies the checks. Most of our people don't use envelopes, and so they copy the checks. So all that needs to be shredded, and you know, it's okay, but I just feel a little nervous about that, about keeping that information. So you need to shred it as soon as you can. All right, so that's year-end procedures. Anything else about it? That leads us up to lunch.
Question on the disability.
Okay.
If you're figuring that up and a pastor takes part of his salary in housing, would you combine those?
Yes, for a minister,
Accurate for his payout.
yeah, disability insurance would be based on salary and housing.
Okay.
Salary and housing. All right, I think we're ready. Okay, Google is all knowledge.
1099 miscellaneous has been in place for a long time, originally established in 1954.
1954?
600 was then or not, I don't know.
I don't know. Now, I don't go back, as far as knowing what's going on, I don't know. I don't go back that far.
It says the $600 threshold for 1099 stuff and certain other miscellaneous payments has been in place for a long time, established in 1954.
Yeah.
I have a question online.
Okay, we've got a question online.
Deborah says, we have 7 employees currently. Do I have to electronically file W-2s?
Okay, the question is, we have 7 employees. Do I have to electronically file W-2s? And so the follow-up question to that is, do you have some 1099s that you're going to have to do? If you do a total of 10, of both forms, you have to do it. But you know, even if you don't have to do it, I think I would do it anyway, because it's coming. That day is coming where we've all got to file electronically, and once you do it, you're really going to be happy with it because it'll be easier. Yeah. All right, we're going to do a session, really short session. We're going to do something that I do in the summer, but I thought I would do it today because I've had some questions about this and about some internal controls, about some procedures, about doing things correctly and doing things well. So I thought we'd talk about it today. Let me ask you, how many of you have never been to one of these before? This sort of thing. We've got a few. Good. And that varies. It varies all the time. Every once in a while, I'll have as many as half who've never been to one before. But so most of you have heard a lot of these things, and then for some of you, all this stuff is brand new. I would encourage you to keep coming. And you can do the live, or you can do the online, or you probably don't need to come every year, but come at least every year or two, because things do change. And I had somebody say, I haven't been in 10 years. Do you think I need to come? And yeah, because everything has changed in 10 years. So anyway, I want to do this session because we had some questions about it, and I think that it's important, about internal controls. So there's basically, and this is on page 63 of your book, not exactly what's here on the screen, but these concepts are on page 63 of your book. Isn't that the right page? It says 60, page 60. Okay, page 60. And so the key thing to internal controls, good internal controls, are these two things. First of all, separate financial duties. And here on the page, I think you see the word segregate financial duties. So separate financial duties. And the second part is similar but different. And the second part is dual control. Dual control. Now that means we want to have kind of like a two-person rule, that two people are watching everything that we do, two people or more. And so about the segregation of duties, let's go back to that one, segregation of duties. So one person doesn't do it all by themselves. And I'm not going to ask you to raise your hand, but I bet we've got some people here in the room who do it all. You count money, you write checks, you sign checks, you reconcile a bank statement, you do all those things. And I would imagine there's people in here who do all that. You shouldn't. You shouldn't. And if you're doing all that, or if you're doing many of those things, you should ask the church finance committee, or let's organize this in such a way that I'm not doing everything. You shouldn't be. There should be a separation of duties. So one person writes checks. Now, we recommend two people sign checks. I know the bank doesn't give a flip. I know that if one signature was on that check, it would go through. I know they don't care. It's not about the bank. It's about you. It's about having other people who are knowledgeable about what's going on, and they see your work. So, yes, one person does write checks, but other people sign checks so they see it. You have one person who, yes, is writing checks, but a different person reconciles the bank statement. And that should be happening in your church. It's a good internal control. And Joellen Johnson, who just retired, she was our CPA for many years, and she said, I want good internal controls. They protect me. They protect me. So, and they do. But they also show the church that, hey, we've got good procedures, and you can be confident in the way that your money is handled. You can be confident that nothing is being done with no one knowing. You can be confident that things are being done properly. So have a separation of duties. And of course, different people count money, and you have and really you should have a couple of counting teams, and they rotate. Maybe one serves for a month, and another team serves for next month, and so forth. That's best. But you have different people who count the money, and then you have another group of people, maybe, and these can be small. You could do everything I'm talking about with about 8 people. And so you've got another group that is the finance committee, and they oversee everything you're doing. And they make the decisions about spending money, and they, of course, work on the budget, and they do these kinds of things, but they also oversee your procedures. So that's a different group of people than the one who writes the checks. Now, your treasurer is probably, in most churches, going to write the checks, or it's a financial secretary. That person should be an ex officio member on the finance committee. And they should be there to answer questions. They should be there to say, you know, how's our cash flow doing? When we pay payroll, what does the bank balance get down to? And you know, how tight is that? How much money do we have as a cushion? They should be there to really answer questions and help that finance committee. But that treasurer should not be making all the decisions. And so you have one group that writes checks, somebody else does the bank statement, other people count money, other people oversee the process. So have a segregation of duties. And I know that many of you are thinking, hey, that's for the big church. We don't have that many people. But you could do it with about 8 people total could be done. All right? Now, the second thing is dual control. Dual control. That means 2 people, 2-person rule. And it's sort of like the first rule, but it's a little different. This time we want at least two sets of eyes on everything we're doing. Now, on the writing of checks, there's only 1 set of eyes, but when they sign it, that's your 2 sets of eyes, 2 or more sets of eyes on that check. And so that is what is dual control. Some of you are doing electronic transactions like electronic bill pay and things of that nature. And what I think is the simplest way, maybe you've got another method, maybe you've got a better method. I heard Michael Batts talk about this, and he had a great method. But to me, just a simple method that anybody can do is when you do those electronic bank payments, you know, pay for the power and the water and whatever, you know, whatever else that you pay automatically. When you pay those things, print those things out on one piece of paper. You know, like you got 10 different payments. Print it out on one piece of paper and have the check signer sign it as if it was a check. It's not a check, but it just demonstrates that they see what you did. And there's nothing that you did that other people haven't seen. So that we're always above board, we're always doing things properly. I had a case just recently where the treasurer was doing it all. And not only doing it all, but also making all the decisions about what we spend and what we don't spend. And that's just not right. Uh-huh.
I have a question about that. Ours are set up through ACH.
Okay.
Alabama Power Bills, all of
Mhm.
ours are set up through ACH.
Uh-huh.
So they're not actually keyed in.
Right.
So how would we do that?
You could you could print them, you know, say you have several that happen, and from your bank, do you get online with your bank? And from that you could print those out.
I still get a notice from the power, get a notice.
Yeah, or you get a notice from the power company. Those kinds of ways. Now, that's just my simple mind and the way that I think. You might have a better way of doing it. And
It's just not, because some of them you have to go in on bill pay or something and
Yeah.
bill in like that, but these are automatic.
right, those are automatic and ACH. And so that's just my way of thinking. You can develop your own way. And like I said, Michael Batts is a noted CPA. He has a very precise and an exact way to do it, like an accountant would do it. And for me, I think real simple. That's the way that I think. So this is the important thing, that you have both in dual control and separate duties. Separate duties. All right. Any other question about that? Now, in the summertime, we usually talk a little bit more in depth about that. But I just want to bring it up because I've seen a couple of treasurers doing it all, and you should not have that burden on you. And you shouldn't have the burden of trying to decide what we spend and what we don't spend, and all that should not be on one person. Yes, ma'am.
Would a form of dual control on like your electronic billing or your ACH payments, say we have one person that kind of like oversees that, and then we have another person that balances the account on a monthly basis?
Yeah.
So like the statement.
Yeah.
Would that kind of be a form of dual control, like at that point when that statement comes out and then we have a printout of what was paid as a dual control?
Well, it is. The only problem with that one, a lot of these things, when you think about electronic transactions, your dual controls are really after the fact. And so, you know, if it's been spent, it's been spent, and we can't undo that. But the key thing, though, and so people like Michael Batts, they'll talk about dual control right when it happens. But the key thing, though, in my mind, is that we've had two sets of eyes on it, on everything that we did. And so I think your method is not the way that Michael Batts would have said it, but I think you've got two sets of eyes on it, and I think that's what's important.
So how would you do it immediately?
He'd have, well, there's sometimes, he might have even two people in the room.
So we don't even
Right, and
position. We're
yeah, that's not going to work for most of us. Yeah. If you want to, let me know and I can send that article. If you'll write it down or email me or something, I can send you that article by Michael Batts. But his methodology is a little bit, for a little bit larger church, involves a little bit more people than what I'm thinking. Okay. Any other question? All right, let's talk about taxes and forms. I'll tell you what, I know we've got some of you Some of you got to leave at 2, and I'll save that session because we did cover some of it, not all of it, but we did cover some of it in the year-end procedures. But I want to talk about charitable contributions. This is about on page 43, page 43 of your book. We need to talk about contributions because January, you're going to have to make sure that the contribution statements are done, and it is recommended by the IRS that you send out your statements by the end of January, although that's not a legal requirement, but you should. You really should do it. Ours are all done electronically, and our statements are electronic, so I really could access it earlier than January 31st. But anyway, so this is something you're going to have to be doing, and you're going to have to get ready for that deadline. So you need to kind of think through what is tax deductible, what is not, what can we do and what can we not do. So the 6 rules, and these rules are really from Richard Hammer, but they're a summation of what the IRS says in IRS publication 526 on charitable contributions. And to me, he put it in these are tax deductible, these are not. And he organized it in a little different fashion, but I like the way he organized it. So it is a gift of cash or property, number 1. We'll say them and then we'll come back. Number 2, it is counted in the year given. Number 3, it is it is unconditional without personal benefit to the donor. Number 4, it is to and for the use of the church. Number 5, it is within allowable legal limits. And number 6, it is properly substantiated. And that number 5, that's not our concern. That's the donor's concern. But the number 6 is our concern, and our concern this time of the year. So another one that when you say unconditional, number 3, it implies this, but the IRS is very specific about this, that if you have a contribution that is earmarked for a particular individual or family, it is not tax deductible. It's not tax deductible. So, so when that was that question on the test about somebody gives a pastor a love offering, and they just say, "Hey, this is for the pastor," and they want it on their contribution statement. No, it's not tax deductible.
If they give for a benevolent family, they just need to say, "Can you put this in the benevolent fund?"
Right. If they,
If it's verbal, then
well,
I'll
okay.
earmark that with that person's name on it.
They may suggest a need, but they can't insist on that need. So let's say they gave $500. I want to help the Smith family, and you say, now if you insist on that, it's not tax deductible. But if you'll let the committee, the benevolence team, decide, then it is tax deductible. And so the benevolence committee gets together. They decide, hey, we're going to give $300 of that to this family, but we're going to give $200 to this one because this family is just as serious of a need as that one. And so if that person allows the church control, they may suggest a need but not insist on it. If they insist on it, it's not tax deductible.
What about if the church is running that campaign trying to raise money for a specific family, and then maybe they've lost their house to fire?
You may do that, but you need to tell the folks, if we take up more than what the need is, then you just know that the benevolence team is going to do what's right, and you might be helping other people. And so that's the way we're going to do this love offering. So tell them that. Tell the people that.
But it would be go on their contribution statement, would it not?
Yeah, if in those circumstances, yes. Now, if you say to the congregation, and what I'm saying is, don't ever say this. If you say 100% of this money is going to the Smith family, no matter what, then it's not tax deductible. And you shouldn't ever say that. You know, what if we took up $10,000, and what if their need only ends up being $1,000? Well, we have used that money improperly, because our use of money should be what is proper, and either is to pay proper amounts to those that we employ and fulfill our purposes. And giving $10,000 to somebody who has a $1,000 need, that $9,000 does not fulfill our purpose.
Does that generate a 1099?
No.
Okay.
Well, if we gave $10,000 and they didn't have a need, it should.
Okay.
But as long as we are meeting a need,
Okay.
it could be 10,000,
Okay.
and maybe they needed that
But
much.
it's not for any services that they provided. is it?
Right.
So therefore, we don't have to issue a 1099.
Right. And in fact, talking about that, we used to have people. We were on a major road right off the interstate, and we would have we'd have people come and want money. And so I would say, I'll tell you what, we've got a big lawn out here. Can you go, I'll give you a trash bag. Can you go pick up trash, and we'll give you money for doing that. And I was thinking more about dignity, but Frank Somerville told me, I mentioned that to him one time, and he said you shouldn't have done that, because they performed work, they got paid, it's taxable. And if we gave them $600, we would have had to have given them a 1099. So anyway, benevolence is a gift. They did not perform work. They did not, it's a gift. It's not payment for any services rendered. So it's not taxable. Okay, so let's go back. It is a gift of cash. Now that means cash, checks, bank transactions. Do any of y'all have any unusual ways to give, like text or some kind of phone thing? Several of y'all are doing that. Okay.
Text online, they're giving through ACH, they're giving direct payment from the
Okay.
banks.
Okay. Well, yeah, and so ACH, those direct things, those are bank transactions, and so those, even the phone and that sort of thing, those are cash gifts. Those are cash gifts. Non-cash would be property, anything tangible. They gave a used computer, they gave clothing, they gave a car, they gave things like that of that nature. They went to Walmart and bought a bunch of stuff.
Retirement accounts.
I'm sorry?
Retirement accounts where I have to give them a letter instead of their,
How did they give their retirement account?
There are RMDs.
their,
Qualified charitable.
their,
Oh, yeah. Qualified charitable distribution. Yeah. And that is actually not tax deductible. And you can't just put that on their regular part of their statement. It's not tax deductible. How many of y'all have had qualified charitable distributions? Most of you have had it. When a person gets to be 70 and a half, they've got their IRA, they transfer it direct from the IRA to the church, bypasses them, they didn't get the money, and that is a qualified charitable distribution. And it is a contribution, but it's not on the contribution statement. And and you acknowledge it, the main part of your acknowledgement is to say, yes, we did receive it. And number two, no goods or services were given in exchange for your contribution. But you don't put it on the regular contribution statement unless your software has some kind of means to do that, where it's noted as a qualified QCD, qualified charitable distribution. It's noted like that, and it doesn't count in the total of what their regular contributions are.
Mark says not deductible on ACS.
I'm sorry?
Says ACS, it marks it as non-deductible.
Yeah, non-deductible. It's not deductible. And the tax advantage is a wonderful way to give, and it's actually a wonderful way for the middle class to give, because most of us cannot itemize, and that qualified charitable distribution, the tax advantage is you never received it as taxable income. So that really amounts to the same thing as being able to take a tax deduction. But it's better this way because you can't itemize because you don't have enough itemized deductions. So it's a great way to give, and that would be a cash. It would be a cash contribution because it was a check came to the church.
When you receive it, does it show that on what you received, that it is
It-
qualified?
It should show it on the paperwork that it is a qualified charitable distribution. Yeah, sometimes you have to do some detective work to find out what it is. Sometimes I've had one or two that had to do some detective work to find out where it came from.
we have a
Yeah.
company that would
Yeah.
not put that church member's name on it for 2 years.
Yeah, and then you might go even like to the senior adult classes and say, hey, we have a contribution that we can't identify, because you do want to send that acknowledgement to make sure that they know that you got it, but then the other part of it is no goods or services were given in exchange. That's an important part the IRS wants. So you have to do some detective work on that.
So if ACH, since it lets you flag it that way, you don't have to send the letter at that point.
Yeah, you wouldn't have to send a letter since ACS handles it. All right, property would be other things. Notice underneath that time and labor are not tax deductible. Time and labor are not tax deductible. We all give to our church our time, and we didn't get a tax write-off for it. But when you have somebody, this typically happens in the trades. You know, somebody does painting, plumbing, air conditioner work, those kind of things, and they say, hey, I did this work, here's my bill, but instead of paying my bill, just put it on my contribution statement. And you can't do that. Okay, so it is a cash gift. Number 3 and 4, it is unconditional and without benefit to the donor, and it is to and for the use of the church. So all of that indicates church unconditionally given and church control. And so we've talked about these earlier. When you do a love offering, you've got to have church control. For the benevolence, say somebody's house burns down, and for that benevolent need, you tell the folks, we're going to take up a love offering. You know about this situation, but you just need to know that if we take up more than what the need is, you're going to be helping other people. It's not 100% guaranteed to go to that family no matter what. And you just tell them that's the way that it works, to be tax deductible. For staff, we control the offering, when it is, how it's divided, what time of the year and for how long we do it, take it up. And then we are obligated to, this is something that I've never seen in a Baptist church be a problem, but I'm going to say it anyway. We are obligated to make sure that the love offering does not make the salary unreasonable. So, you know, if you had, let's say that you've got 2 people that it's going to on staff, and the pastor's rich uncle is in the congregation and says, hey, I'm going to bless my nephew, and I know I'm going to bless this other person, but I don't care. I'm going to give $100,000. Can you do that? No. And you as church leaders, you'd have to go to them and say, hey, this makes the salary unreasonable, and you may give some of it, but would you let the rest of it go to the building fund or something like that? You can't let this whole $100,000 go to the pastor. You can't do that. And so that's something we've got to, finance committee, treasurer, we got to have that in the back of our mind, but like I said, I've not known of a Baptist church where that was a problem. So let me know if you've run across that. Okay, so church control. Contributions that are not deductible, made, and this is in your book, made to a specific individual. Contributions that to a non-qualified organization. Well, we as a church, we are qualified. Contribution that is for time or labor and things like that. So substantiation, this is, it used to be on page 51. It's probably about page 46 or so. Up at the top of the page, it says substantiation.
Bottom of 47.
47. Okay, yeah, the word substantiation, the bottom page 47, and then it goes over onto page 48. I can fix that. I can't do it. Anyway, so the contribution, as we do our report, it lists the name of the organization, the church, and then it's got to show the date and amount for every transaction. Now, I'm fudging a little bit on that, and I know I am. That's not exactly what the IRS requires. What the IRS requires is if the amount is $250 or more, you must itemize the gift. But to me, it's too much trouble to say, hey, we're going to itemize these, and these gifts of $50 we're not going to itemize. We're going to, let's say you gave $50 every week. So that'd be what, $2,500 that you gave, but it wasn't $250 per gift, and so it'd be $2,600. And so we're just going to conglomerate that and say you gave $2,600 for the year. According to the IRS, you could do that. But to me, it's just easier to have one procedure. We itemize every gift, no matter how much it is. So, because at $250, we must itemize with the date. And so why not just itemize everything? So that's the way that I teach it. And so the name of the organization, the date and the amount, the date and the amount, the date and the amount on each transaction. Okay? Now, if they receive something in return, you show that. And that I would do that unless, now ACS probably has a way to do that, but otherwise you might do a letter. If they got something back, like let's say that we had a car wash or spaghetti supper or something of that nature, we're raising money, and you say, hey, this is a free car wash, just make a donation. And somebody gives $10 and they want you to put that on their giving record. Can you do that? No. Because they hopefully got about $10 worth of a car wash. And so on that sort of thing, let's say they gave $100. Yes, you can do a letter for that. You say, thank you for your donation of $100 on such a date. Of course, it's got our church letterhead or whatever. And then in exchange for your donation, you received a car wash worth about $10. Approximately $10. That's the way that you do that kind of a contribution. Because on your other contributions, down at the bottom, it's going to say, no goods or services were given in exchange for your contribution. That wording must be on the statement or the IRS will deny the whole thing. So make sure that that wording is on there on everything that you do, except for if that's not a true statement. And another way to say it, you could say, no goods or services were given in exchange for your contribution unless otherwise noted. And I suspect that ACS and some of the ones like that might do it that way. Okay? That wording must be on there. All right. If they did get something in exchange, you tell what it is and the approximate value of it. Now, bottom of the page, the bottom of that page 48. If it's less than $250, the IRS will accept an acknowledgement from the church or a canceled check. A canceled check. But if the gift is $250 or more, then if it's $250 or more, then you must have the statement from the church. The IRS will not accept your canceled check as proof, even though you're saying, "Hey, here they are," or "Here's my bank statement," and I can prove it, but they won't accept that. It's got to be from the church. Yes, ma'am.
They have a bake sale, someone gives $200, but you have no idea what they bought. So you don't know value. What do you do?
Okay, if you had a bake sale, I think I'd call that person and say, "What did you buy?" And a cake or something, I think I would estimate some, approximate value $20 or something like that. I mean, $15. What does it cost to bake a cake?
We probably raise $20,000 at our bake sale.
Wow.
For you.
Yeah.
We say that every cake is worth
Okay,
And if you get,
that's a good,
we've had them sell for $800 a piece.
yeah.
And so we take away
Wow.
$25 from that and then give them a contribution for a student fundraiser.
Well,
Or the cake.
all you have to say is thank you for your contribution of $800, and you got the church noted and stuff like that. In exchange, you received a cake worth $25, and you got the date on it. You don't have to say it's a student fundraiser. You can if you want to.
It's a great fundraiser for students.
Okay. Now, okay.
So like on ACS, you can put that as donations for an item of value and put base down. So you really do need to put an amount of what its value. Because I know we just had one, so I have some donations that I just put base sale and did not put the value.
You didn't put a value,
No.
and then they've got to figure out the value. I guess,
I don't know what you want.
yeah, I guess you could. But the only problem with that, if they were audited, the IRS might say, hey, what if you bought 50 cakes, to me, it's better if the church says you bought a cake for $25 or something like that, because without any acknowledgement, we don't know how many cakes they bought.
That's right. So we just
Yeah.
need to do it when they're running the bake sale.
I kind of think I'd call the person and say, what did you buy? And I'm going to put an approximate value. I think that'd be better.
And a question.
Okay, question
Am I only
online.
required to do contribution letters over $250?
Okay, they do the contribution letters.
Are we only required to do them if they're over $250?
Okay, okay, so now is this just a regular contribution letter? Okay, I'm going to assume that it is. Regular contribution letter, are we only required to do it if it's $250 or more? Actually, you're not required to do it at all. Did you know that? You're not required by law to provide a statement of contribution. But you're not going to get as much money if you don't provide those. So, we really need to. And if I was in a church that did not provide a statement, I would make sure that all my checks were less than $250. And, that might sort of discourage some potential giving that might happen. But I'd make sure that my canceled checks were going to count. But anyway, this question is so number one, you're not actually required to. But second part, even if you're thinking, yes, we're going to do statements, and so should we only do statements that are $250 or more, I would recommend that you do statements no matter what the amount is. And, and also, let's say children are giving $1 a Sunday. I like to have them have a statement. I think that's good that their church acknowledges that and says thank you for that. But technically, you don't, and of course you don't have to do it at all, but if you're going to do it, you don't have to do it unless it's $250 or more. So technically your question is correct, but I suggest doing it for any amount. That's my recommendation, to do the statement for any amount. That's a great question. And there are churches that, let's say that if a person has not given $100 for the whole year, or they haven't given this or that for the whole year, we're not going to do a statement. There are churches that choose that, but that's not my suggestion. Okay? That's a good question. So if it's $250 or more, the IRS will only accept the statement from the church. And it must state no goods or services were given in exchange for your contribution. Non-cash gifts would also include the things they buy from Walmart, for example. And what they do is they come in and they bring their stuff. I bought all this stuff for VBS, and here's my receipt, and here's my receipt. Would you put that on my giving statement? And this is one where you make people mad, but you have to say, no, you didn't give me cash. You gave me merchandise. So I'm going to put it on, and with ACS, some of the others, you can do a non-cash gift, and you're acknowledging what they gave. You know, you gave 12 pieces of poster board and you know, this many numbers of construction paper and this much crayons or markers or things like that. And you tell what they gave, but you don't put an amount to it. And you do all that, you list all that, and then you give them their receipt back and say, save this for your tax records. That's the right way to do that. But a lot of donors want you to put that on their regular giving statement, and then, you know, because that's the way that they've done it in the past, they want you to do it. And that's not really the right way. Now, that amount from Walmart, and let's say it equals $100, and a $100 check, when they deduct it on their taxes, it's the exact same thing. It's the exact same thing, but they just want it that way on their cash contribution statement. But that's the reality of what should be happening. Okay. A lot of times we do provide goods or services like a car wash or a dinner or something like that. So make sure you're handling those when they did get something in return. And then I also wanted to point this out. It should be about page 45, thereabouts, about camps and retreats. Those, they did receive something in return, so it is not a contribution. And the only contribution regarding camps and retreats would be if they gave over, you know, I'm a parent, I write you a check for whatever the camp costs, and then, hey, here's another $200 to help somebody else go. Or if I'm not a parent at all, and I say, hey, here's a $200 check, use it to help anybody to go or anything else you might want to do in the youth ministry. And then those checks that are unconditionally not earmarked, those checks would be a contribution. Okay? Camps and retreats are about us. They benefit us, so we did receive something in return. Now, a mission trip, I'm going to come back to this one. A mission trip is a tax-deductible event. A mission trip is a tax-deductible event. And so it's because it's not about us. We are volunteering our time to go and serve. Mission trip, disaster relief, all those kinds of things. We're volunteering to serve, not to receive. I mean, you do receive a lot from it. It's wonderful. But that's not your main purpose. Your main purpose is to serve, so that mission trip is tax deductible. And so an adult paying their own way, it is tax deductible contribution. Another person who's not going and they say, hey, I want to give towards the mission trip, they may do so, and that would be tax deductible, but they cannot designate it to a specific person. And then the third category is parents paying for their youth to go on a mission trip. And because of a court case, Richard Hammer says this differently than he used to say it. And so an adult paying for a youth to go is not tax deductible. Well, I thought you said it was. Not tax deductible unless it is given unconditionally in a fashion that is for, to and for the use of the church. And in other words, they can't get their money back. No refunds on a mission trip if you want it to be tax deductible. See what that does? And in your book, I underlined the word unless. Unless. So you tell the parents before we go, this is tax deductible, but you don't have an opportunity to get your money back. You're giving unconditionally. And if your youth does not go, you're helping other kids go. And you'll just know that. Okay, so a mission trip is a little bit different. See how that goes between a camp and a mission trip?
Really have a question about that.
Yes.
It says it's okay to do non-cash contribution letters. Like several donors who donate items throughout the year. We list the items but leave the amounts blank.
Yes, that you may do a non-cash contribution as a letter. You may do it that way. And just be sure that on the letter that you include the date of the contribution, the what listed, and then say no goods or services were given in exchange for your contributions. Good question. All right, so that's about mission trips. One more, just because it's included here. Down at the bottom of the page, if we repurpose designated money, we've got to have a two-step process: vote of the church and permission for the donors. Well, that's almost impossible. So this is the method. Alabama Code section, and down at the bottom of the page it listed that if you have a designated fund and the amount is less than $50,000 and it's more than 10 years old, that you may contact the Alabama Attorney General and may notify the Alabama Attorney General your intent to change it, then wait 60 days. You wait 60 days, and then after 60 days you may change that fund with a vote of the church. You're waiting 60 days that the Attorney General could respond, no, I'm not going to let you change that. You could, but then you've given him plenty of notice, and so after 60 days you may change it. And if the amount of money is impossible, impractical, illegal to use for the purpose it was originally given, then you may change it. And a lot of times it is impractical. One example that I give all the time is we established a choir robe fund. We never did get enough money to buy them. Now we don't want them. And so we want to change that. And so this method at the bottom of the page would give you a procedure that you could change that. Okay.
Does the vote of the church mean majority vote?
Yes, it would be a majority vote. But in many churches, a finance committee could make that sort of decision. In many churches, you've given your finance committee authority to act, and that depends on your church and how you do it. And like we said earlier, if the church is setting aside the money for a designated purpose, the church is doing that rather than you giving your members an opportunity to give to a specific fund, then the church setting aside that money, you can do anything you want to with that money. You can change it, you can do it for something else, you can do whatever you want to. You can put it back in the general fund, whatever you wish. Okay.
What if it's more than $50,000?
First question I would ask is there any way we can spend this money? I mean, legitimately. So if it's choir robes, that kind of limits us. But if it was just, I've noticed some churches, they had a music fund, and it's sitting there, and they're not using it. Well, why? You can use that. I mean, every church I know of is singing or doing music in some way. You can use that money, and please go ahead and use that money.
Like broad titles are better than narrow titles.
Yes. Broad titles are much better than narrow titles. Don't make it the new sanctuary fund like I was talking earlier today. Make it building fund and tell your people building means whatever we build, remodel, refresh, repave, next. And, give that broad kind of description to it. All right, let's take a 5-minute break. And then we will do our last session. We're a little bit early. Okay, let's take a 5-minute break. All right, we're going to do our last session, and we're a little bit early, but I don't think y'all will fuss at me too much. But any questions or anything like that you have, feel free to ask. And we're also going to go through this section just a little bit fast because we've covered some of this in the year-end procedure discussion. So as we think about, we're going to start on page 7 of your book. Now, I pointed out this morning that we're not going to go there right now, but the very, very last page of the book has some resources, and I've mentioned State Board of Admissions. I've mentioned my webpage, which is alsbaum.org/CCS. I mentioned that you can find my cell phone number there, and of course, like we said earlier today, if you call the office and I'm not there, it will transfer to my cell phone. So part-time. I can't believe I'm still doing this. I have been retired for 6 years. In fact, a little over 6 years, and never dreamed that I'd be still here, but I'm still here so far. And but I enjoy what I do. But anyway, so if you call the number, it will transfer to my cell phone, or just simply call my cell phone, and I'll get it. All right, so page 7. Very first thing, if we are going to pay somebody, we're going to pay anybody, very first thing we've got to do is determine if they're an employee or a contract worker. Employee or contract worker. So if you've got 3 different tests here, and the IRS currently is using the shortest test, is the way they're doing it, but they all point to the same thing. How much control do you have over this person working? And if you've got a good bit of control, they're an employee. If you've got almost no control over this person, they're a contract worker. So who provides the materials? Now that one is, none of these are break or make the test in and of themselves. Like, for example, I've had people through the years say, we have a custodial arrangement where they come anytime they want to, do it any way they want to. We just want it clean by Sunday, but the church provides the supplies. Well, that person is a contract worker. Now, normally providing the materials, the supplies, things like that, that's one of the indicators of an employee relationship. But this is a balance test. So one factor doesn't make or break it. When do we tell them to come and get off and what they're going to do and how they're going to do it? Do we give the instructions for, okay, you're going to show up Monday morning at 8 and first thing we want you to do is rearrange this room and move the tables and clean it all up because we've got a meeting in there later? Or if we're saying that sort of thing, that's an employee. If we're saying, hey, we don't care when you come, we don't care what you do, we don't care if you come at midnight, we don't care what you do as long as it's clean by Sunday, then that would be a contract worker. Who provides the training? Then if we do it, then that would tend to be employee. And you see those other tests. Permanency of the relationship. If it's a permanent relationship, that would tend to be an employee. If we have a cleaning service, Well, in the next year or 2, 3 years, we might put this out for bid again, and we might check and see about possibly another different arrangement on the cleaning. So permanency would be employee, not permanent would indicate contract. Does anybody have somebody that you that you have that you're not sure? You're not sure if they're an employee or not sure if they're a contract worker. You want to kind of evaluate it? Let me give you one that blew our minds as we were in a tax conference. This just blew our minds. You know how we often contract with extra musicians for like the Christmas music? And we get them to come in, they start coming into the rehearsals, they come to say 3 rehearsals and then the performances, and we pay them. And how many of y'all would give that person, let's say it ends up being over 600, how many of y'all would give that person a 1099? Just let's do a raise of hands on this one. Okay?
I would have until we realized maybe that we're telling them what time to be at practice
Yeah.
and what time to be at that service.
Yeah, our tax attorney said
This is our deaf ministry.
you really ought to make them an employee because you're telling them what time to be there, when they're getting off, what to play, when to play it, how to play it. They're using church music, the church music stand. They might be using a church instrument. And he said that really ought to be an employee. And all of us in the room were just dumbfounded. Yeah.
Even though they play somewhere else as a profession.
More than half of our pastors are bivocational. And we don't give them a 1099. We need to be giving them a W-2, and they work somewhere else. You know, generally, they have another job. Just because they don't work very much doesn't mean 1099. Let's say you have a nursery worker that works 2 hours a week, and you pay them. It's going to be an employee. Doesn't matter about how many hours they work. Does it matter that they're seasonal, like summer or something? It's a matter of definition that has to do with these tests. Okay, so first determine, are they an employee or not an employee? And then if we determine they're an employee, we got to have these forms filled out. And there's 5 things. W-4 and A-4, like we said this morning, you should be doing that every year. At least do it every couple of years. I know people who haven't done it in 10 years. Don't do that. You should at least be doing it every couple of years. And you really ought to be doing it every year, just in case things change. And that's your withholding form. Then I-9, that's the immigration. And even if you've never done that, do it now on your current employees. You don't send that anywhere. You just keep it on file. And so do your immigration form. And then the last 2, E-Verify. As you read it's a federal program, but as you read it all, it talks about it being voluntary. And it is voluntary, but it's not for Alabama. Alabama law requires it. So you've got to do E-Verify. And you're going to think, well, E-Verify and I-9 do the same thing, essentially. And yeah, they do, but this is what the law requires, so you got to do both. And then the NH-1 is the Alabama new hire form. And so only do E-Verify, only do NH-1 if it's a brand new employee. Don't do that on your current employees.
But I understand treating people as employees like that, but then you've got, in the case of the piano worker that comes in, or the music person that comes in, that you're going to use for 2 months for practicing and stuff, to have to jump through these hoops for the law, for what little bit you're gonna compensate them for, seems ridiculous.
I understand.
Especially when you've got somebody comes in and you want them to come in and play the drums for the musical,
Yeah.
5 hours.
Yeah.
You're like, okay, well, wait a minute, I gotta do a new hire form now, I need your I-9 form now, I need a passport or your ID, and now they're gonna look at you and say, oh, go get you another drunk.
Well, I understand, and so, now, the IRS does have, for a W-2, there is a minimum of $100 for the year. So if you pay them less than 100, you could get by with it. But the other thing is contact your congressman. Ask them to change it. Ask them to change it. Yes, ma'am.
On the NH1, if that wasn't done, can you go back and do it?
I wouldn't. I'd just let it alone.
You'll get penalized.
Yeah.
for $5 for
D-
every one
d-
of them.
I didn't do that. We just-
Yeah, a lot of churches haven't,
Okay.
but anytime you hire somebody from now on, make sure that you do it.
The E-Verify as well,
Uh-huh.
those two.
Yeah, make sure you do those two for any new hire. Okay,
Go back and do the E-Verify,
no, don't do the E-Verify. For your current employees, don't do E-Verify, don't do NH1.
Well, it's supposed to be done within 3 days from date
Yeah.
of employment, so if you do, it's gonna flag it on there. But you also, with that now, you've got a new login out there and all these ID me hoops, now you gotta jump in.
What about
Yeah.
background
Log
check?
on.
Do you have a good site to do that with?
Okay, background checks, you should be doing background checks when you employ somebody. And we've got a website, safe.alsbaum.org, safe.alsbaum.org. If you scroll on down, you'll see several companies that are suggested for background checks. And you'll see Ministry Safe, they do background checks. Protect My Ministry, there's several companies that will do background checks. And I'll put in a plug. This is not about tax, but you need it. Everybody needs it. Ministry Safe, you can join Ministry Safe for $50 for the first year. You go to ministrysafe.com/Alsbaum, ALSBOM, and you can join and put in the coupon code Alsbaum. It's real easy. In fact, I think it says it there that the coupon code is Alsbaum. You know, sometimes you have to know what the coupon code is, and so it's there. But you can join for $50. They do background checks, but you should be, even if you don't do background checks, you should be training your people in protecting children from child sexual abuse. And that's so important. And they say some things that I just don't hear anywhere else. Well, in fact, just today, I sent it out on Facebook, so some of y'all might want to look at my Facebook page or start following the Ministry Safe Facebook page. They put out a thing just today on how do I look for, what guidelines do I look for in terms of my child doing a sleepover? And, you know, you don't see that coming from anybody else, not really. And they do, in April, they always do the mother-daughter conversation. They have a daughter who's now an attorney and now joined their firm. And they say, you know, we've been doing this all of our working lifetime, and you've grown up with it. You know, did we mess you up talking about child sexual abuse all the time? And she said no. But anyway, they have a wonderful conversation. They have a conversation about how to talk to your children about protecting themselves and what is improper places to touch and all those kinds of things that you need to know. And that mother-daughter conversation is absolutely wonderful. And in April, they put it out for free. But even if it's not free, it's worth it. It's like $8 each training that you do, and you watch them online. But anyway, do Ministry Safe. They do background checks, and most of us in this room, we do need to watch the one on background checks, because background checks they don't do anywhere near what we think they do. And they might not be accurate in some respects. But now, we still must do them. We must, don't hear me today and say, okay, we won't do background checks anymore because they're not very effective. About 90% of abusers never get caught. So that means they don't show up on a background check. And there's several other things that cause a background check. Some jurisdictions are not real good about reporting. And so there are some problems with background checks, but you still absolutely positively must do background checks. And in fact, Greg Love, who's the attorney with Ministry Safe, he said that he had that happen, that he was talking about how background checks are not very effective, and he had somebody say, oh, we're going to save a bunch of money. We're not going to do background checks anymore. And he said, that was dumb, and I had to write them a letter saying, you must do background checks. Do not take anything that I said to say don't do them. So I'm saying the same thing. Don't take anything I say to say don't do background checks. But that is a method, and even if you don't use Ministry Safe for your background checks, you should watch that video, I think it's about an hour, on background checks. You're going to learn a lot that you didn't know. And every time I hear them, I hear some things that I didn't know about child sexual abuse or about background checks or about any of this. But that is something we should do. And for people who handle money and our ministers, I think we need to do a credit check. And it's not that you want them to have a perfect credit score. You just want to make sure that they pay their bills. If they've got a 400 credit score, there's a problem. There's a problem there, and you might need to say, now, maybe they've got a good explanation. Maybe they said, we just really, we had these medical bills and this happened and all that, and we couldn't pay them and so forth. But they need to explain that if they have a very poor credit check. It shouldn't be that they're just not good about caring about paying their bills. You shouldn't be hiring somebody if that's their attitude. So, and also, if they've got a very poor credit rating, they might, one of the things about stealing from the church, there is a sense of need. I need this money. There is a sense of, it could be a sense of I don't get paid enough, so I deserve this money. Or it might be I'll just borrow the money and I'll put it back before anybody knows. There's a sense of entitlement and opportunity where we don't do internal controls very well, so there's that opportunity. And so there have been, if you sat where Jim Swedenberg and I sit, you would just be aghast about how many cases of embezzlement there is in churches. And most of the cases we see, something happened and the person didn't intend to steal the money, but they did. We don't see very many career criminals working in churches, but there was one that I saw. The person stole a relatively small church, stole about $20,000, and I'm like, how in the world did y'all not miss the money? And I found out how that person was not showing. They'd show how much money came in and how it was spent, but they didn't show what the balance was at the end of the month. And so it was so confusing, nobody could make heads or tails of it, and that's the way they stole the money. But don't let me give you any ideas. That would be another thing about this internal control that we're talking about earlier, is make sure your reports are easily understood. Make sure that they show beginning balance, what we spent and how we spent it and what we ended up with, and make sure all that balances. So anyway, background checks, they're very, very important. But, and I suggest go to safe.alsbaum.org and you'll see some companies that provide it. Yes, ma'am.
How often should we do this? How often should we reach out?
Redo background checks. They're suggesting it's sort of a moving target. They used to say 5 years. Now I'm hearing 3 years. And then there are some companies that recheck every year. They just do a recheck. So there are some that will do that. I think we do them here at the State Board of Missions. And, we don't have anybody who showed up on a background check. And we redo those. Now, also, if you're involved in disaster relief, you're going to have a background check done. But we do those, and I think it's time for us to do them again here at the State Board of Missions.
Disaster relief has gone from 4 years to 3.
It's gone from 4 years to 3. That's what I'm seeing is the amount of time is shorter than it used to be.
On that line, our insurance company made us have a written policy like our preschoolers. Have it written down, you're gonna do your background checks every year as we decide.
Yeah.
2 years, 5 years, whatever. We had to have a written policy.
But make sure on your children and preschool and youth, make sure that you don't just do background checks. Make sure that you also provide training. Got to provide training in preventing child sexual abuse. And to me, in my mind, Ministry Safe does a great job of that. I've heard that International Mission Board has a great program, but I've never seen it. I've asked about it, and I don't know how to see it. I don't know how to watch it. Have y'all heard anything about that? Okay. Anyway, all right. Enough on that. We've got a question.
What if we have never done E-Verify for any of our employees?
If you've never done it, don't do E-Verify until you get a new employee. Yeah. Good question. All right. Most common mistakes are just not doing these forms at all. W-4 form, make sure you do that. We've talked about the W-4. We also talked about the W-4 for ministers. And, of course, there's 2 mistakes with that form in order to get it on one page. So it's going to estimate it slightly high. And then if that person, that family, not person, but the family, has a family income of, now I'm talking about a minister, so they have housing allowance, and their grand total of all the money coming in is somewhere north of 140,000 family, then they're going to be in another bracket and they need to count for that other bracket. So there's 2 mistakes on that form, but it will cover a whole bunch of us and give us an easy way to do that. If the person is a minister, we want to find out what kind of minister are they. So is this person an ordained minister and leading worship and those kinds of things? Or is this a minister who's not ordained? And we have several people that are not ordained. Often youth ministers, children's ministers are often not ordained. The worship minister oftentimes is not ordained. In our church, we just ordained the worship minister. So, but oftentimes they are not. And so that person who's not ordained, they're still a minister. They're still a minister for Department of Labor purposes. Now, let me explain the difference. IRS has a definition. For tax purposes, you're a minister if you're ordained or licensed and you serve in these ways: leading worship, leading the organization, leading the ordinances, considered to be a religious leader in your church, and so forth. For Department of Labor, they don't care if you're ordained or not. So obviously those ordained ministers do meet the definition for Department of Labor, but some other people meet the definition for Department of Labor. And that's those, in fact, 1 Frank Somerville said the basic concept is it's those people that we employ that impart the faith. Like let's say a children's minister. And it doesn't matter what you call them, whether you're children's minister, children's director, whatever you're going to call them. Do they impart the faith? Do they teach the Bible to children? Do they teach the teachers how to teach the Bible? Do they lead the children to towards a decision for Christ? Do they do those kinds of activities? Though for Department of Labor purposes, those are a minister, and you don't pay overtime. They're an exempt employee. You don't pay overtime. I had a church recently that said we have a children's director, and I talked through all that, and I said, you really want to have that person meet the definition, have a ministerial job description, and meet that definition for Department of Labor purposes so that you don't have to pay overtime. And they said, no, thank you. We're going to keep it children's director, not a minister, not a ministerial job description. And when those things happen, we'll just pay overtime. But I think most churches want to have that person be a minister for Department of Labor purposes where they're not going to be paying overtime to that person. And they meet the definition even if they're part-time and don't make much money. They don't have to meet that $35,000 a year in order to be considered an exempt employee. So what kind of minister do we have that we're thinking about? And so we think about exempt and non-exempt. We talked about that earlier this morning. And then the next question, is it taxable? Is it taxable? Let's go to page, I think about 14 or 15. Okay, this starts on page 21, and then it goes, the chart is actually on page 22. So I've got a chart for you about is it taxable or not. And we're going to kind of quickly go through this chart. And the idea is that unless the IRS says it's not taxable, it is taxable. Frank Somerville has that quote that I think is a wonderful quote. Everything is taxable unless the IRS code says that it's not. You know, we think about a gift, well, like the question about love offering. Do we have to make that taxable? Well, it is money, and it is they're performing work for us, or service for us, and so therefore it's taxable unless there's a reason not to. But you and I think about it's not taxable, it's my money, it's not taxable unless the IRS makes me. You know, that we've got a different point of view of that. And so is it taxable? So we see that salary, love offerings, bonus, those are taxable. Severance pay is taxable. Retirement gifts are taxable. Social Security offset. Some of you provide a Social Security offset for your ministers. And what you're saying in that is that our other employees, we pay half of their Social Security for them. But we can't do that on you. You have to pay your own. And so we can't pay it, but we're going to give you the money. And we'll give you the money to help pay it. And so a lot of churches will provide an extra 7.65% to their ministers. You could provide 8% if you want to, or whatever you want to provide, but it is regular taxable income is all that it is. And it does help. It is a good thing to do, to provide a Social Security offset for your ministers. Now, that's for your ministers, not for your non-ministers. Gift cards would be taxable. Payment of personal expense, like say you have a minister and you pay for his car insurance. Well, that's not one of those benefits. So So that would be a personal expense, and that would be taxable. Forgiveness of debt is taxable. The imputed interest on a loan larger than imputed interest when you've loaned somebody money at less than market rate, and then the forgiveness of debt, those would be if the loan is, well, on the imputed interest, if the loan is $10,000 or more. Any kind of forgiveness of debt would be taxable. Let's say that you say to your youth minister, we're going to give you $20,000 towards a down payment, and we're going to give you this money. We will forgive $5,000 per year, and so we want to encourage you to stay. We'd like for you to stay, and we're going to forgive $5,000 a year. Well, that $5,000 would be taxable money at each year that you forgave the debt. And of course, in my example, you'd also have that imputed interest because I didn't mention the interest. Club dues, like athletic club, sports, workout, that sort of thing, club, would be taxable. There's a social club in Montgomery that they don't, as far as I know, they don't do anything but provide a really nice club, dinner, all that sort of thing. So those kind of club dues are taxable. Dues for a professional organization that has to do with your job, that would not be taxable. Like, I've not asked the State Board of Admissions to pay it, but I am a professional parliamentarian. And so when I pay my dues each year as a professional parliamentarian, the State Board of Admissions could pay that. And that would not be taxable if they did. Discretionary fund is taxable unless the pastor accounts for every penny, and every penny was used for purposes like benevolence. Housing allowance is not taxable for the ordained minister, but of course there are ways that you have to do it, methodologies that you have to do it, and then it is taxed for self-employment tax. Salary and housing are both taxed for self-employment tax. Reimbursements, if you do a non-accountable reimbursement, that is taxable. Like, for example, you just say, hey, we're going to give you a $500 a month car allowance. And you say, well, do I need to turn in reports supporting that? No. We're just going to give it to you. Well, that's taxable money. It's only tax-free if you say you're going to turn in reports and we're going to reimburse you 70 cents a mile for your travel. That's business related. And then it's tax-free. If you have an accountable reimbursement plan, that's not taxable. If you paid for, say, your pastor or youth pastor to go on a mission trip, that's not taxable. Holy Land trip, we said on the test, it is taxable. Spouse travel is taxable normally, but if the spouse has a business reason to go, like elected to be a messenger and goes and participates and votes and all that, that would not be taxable. You may have cell phone is not taxable as long as the understanding is that it is primarily for business purpose. You may have a tuition assistance plan, and you can do that, but you need to set it up with a written arrangement that's properly done, and it's got to be available to all the full-time people, and you may do that. If you pay for, we had a youth minister one time who didn't have his bachelor's degree, and we paid for him to get his bachelor's degree. Well, that's taxable because we didn't offer that to the other employees. And so a bachelor's degree is taxable. You may reimburse for a course at seminary that's like for their master's. You can reimburse for that course as you do that. Moving expense is taxable, whether you pay it directly or reimburse it or however you do it, it's taxable, included on the W-2. Then benefits, you may provide benefits like medical plan, you can provide dental, vision, you can provide disability insurance. Now, let me mention that one. Disability insurance is one of the most underused forms of insurance, and it really is needed. We're more likely to become disabled before we turn 65 than to die before we turn 65. So we really need to provide disability insurance. And disability insurance is not that expensive. Term life insurance is not that expensive for you to provide it for your employees. And you really want to do that. What would happen if you had a minister, we had one time we had a minister that was, I think it was early 40s, die. Now what do? He didn't have any life insurance. We didn't provide any life insurance. What are we going to do? And you end up paying the widow and family for months, maybe 6 months, until they figure out how they're going to live. And that payment is more expensive than the insurance would have been. And the insurance, what would really be best if that minister provided, say, 10 times his income in insurance. Now, you can't do 10 times the income through Guidestone, but if you did 2 times or 4 times as the church provides, and then he picked another 6 times, for example, in life insurance, then he'd be well covered. And that coverage could get his family down the road for many years and, get his kids out of the house and through college and stuff like that. So those things are not very expensive to do. And we should be doing it because the what if can be really bad in that situation. Employer contributions to retirement. Your church should be doing that. On average, our bivocational churches are doing that. So if you're in a church that has a full-time pastor or more, more staff, you should be doing that. You should be providing for their retirement. Ideally, it'd be nice if you were providing 10% and make it a match. They don't get the 10% unless they're contributing 5% or that type of thing. Or build it up. We're going to start it, the church will contribute 5%. Every year you're here, we're going to increase it a percentage to 10%, and then we'll only do those things if you're also matching. So it's good. There's like a third of all Americans don't have a dime saved for retirement. Don't have a dime. And I listen to Dave Ramsey a lot, and it just amazes me, the people who say, well, there was a call just the other day, I'm 60, I want to retire at 66, I don't have a dime saved, and I've got a mortgage of $500,000. That's just, I have a relative that lives on nothing but Social Security. That is hard. It is hard. And she doesn't have, she pays her rent and her basic utility. She eats, and she's got one of those Advantage plans, so the premium is either very, very low or nothing. And so she does have some medical coverage, and of course she's got Medicare, but that's it. That's it. She doesn't have money to do anything, not anything. And so we used to go, and she doesn't drive a long distance anymore. She'll drive in town, and we used to go pick her up and bring her to Alabama and do some things, but she doesn't really want to travel anymore. She just made a trip to her son's house, but basically she doesn't want to travel anymore. But that's just sad to me. That's just sad to me. Lynette and I had goals and plans and dreams and things like that, and One of our dreams was to travel some, and we've been able to do some of that. So anyway, it is good for you as a church to provide retirement. Now, IRA. Sometimes you'll have a minister that wants you to contribute to their IRA. Well, that's not right. An IRA is an individual retirement account. You're contributing to an employer plan. An employer plan. That's what the church retirement plan is. And so you shouldn't be contributing to their IRA. If they want to do that, they can do that. But besides that, for a minister, an ordained minister, they really should be putting most of their money in the church retirement plan and traditional in the way that they put it in. Traditional in the way they put it in. So I'm saving on taxes now. And since I'm an ordained minister and I have this weird situation about my Social Security, I'm saving on federal tax, state tax, and Social Security taxes as it goes in. Then, when I take it out someday in retirement through the church retirement plan through Guidestone, I can take a lot of that money, maybe even all of it, out as a tax-free housing allowance. Tax-free. You can't do that with an IRA. You can't do that with Merrill Lynch or Fidelity or Vanguard. You've got to do that to get the housing allowance. As an ordained minister, you've got to do it through the church retirement plan through Guidestone. So your church should have a policy. That's what we do. I had a church recently, and they're changing, but they had gone to all the trouble and expense of setting up their own retirement plan. It was a 401k, and their ministers were not going to be able to take advantage of housing allowance in their retirement years. Now, they can now while they're employed by the church, but in their retirement years, they wouldn't be able to. And so we talked about the advantages of Guidestone, and they've set it up through Guidestone now. You can provide some other things if you want to, like dependent care assistance. I've had some very, very, very young staffs with lots of kids, and they wanted to do that. I had a church that was extremely interested in adopting needy children, and they set up an adoption assistance plan. It wasn't a huge church, but they were just concerned about it, and they set up an adoption assistance plan. Yes, you can do those things and provide for those kinds of needs.
Lee, what's better for a minister that he's full-time, fixing to retire in January, but he's gonna stay with us part-time?
Okay.
So he's not receiving any benefits, just his part-time salary and his housing.
Okay.
So, but he will start drawing his retirement from Guidestone.
Okay.
Is it better for him to do housing through them or to continue housing through us? Because right now, we've got it set up through us.
Well, while he's working for the church, he needs to take it through the church. I'm still working for the State Board of Missions, so I take my housing allowance through the State Board of Missions. Now, when I give it up totally, then I'll start taking my housing allowance from Guidestone. Is what I'll do. And also, once you hit 59 and a half, now, I'm not recommending this because most of us at 59 and a half, we don't have enough money in our retirement. But this money is your money. When you get to be 59 and a half, you may start taking money out. You pay taxes, but not penalties. Right now, I'm not taking money out monthly. We are taking some money out occasionally for a trip. We're having fun. And that's one of the reasons why, now, I enjoy what I do. I feel called to what I do. But as far as monetarily, I'm still working for us to be able to travel, well, two reasons. One reason is so we can travel. And 1 year we did a Mediterranean cruise. We've done the Alaska cruise. We've done We've done more, I told the congregation, we've done more in 6 years. Well, two things. When you think about travel, when you think about concerts, now, we live only 100 miles from Nashville, and we have gone to the Ryman a bunch of times, and it is amazing, and the Grand Ole Opry a couple of times. But we've seen more country, Christian, and rock concerts in 6 years than we've seen in 46. We've been married 52 years. And we've traveled more in 6 years than we've done in 46. So I'm still working for those reasons. But any questions about what is taxable? What is taxable? Let me back up a couple of pages. This is something I should have said, but I need to say it. On page 21, if you provide, thank y'all for coming. If you provide a group health care plan, that is a tax-free benefit. If you provide Guidestone, that is a tax-free benefit. You could provide a group health care plan through somebody like Blue Cross if you want to. Although I'll tell you, Guidestone has been beating Blue Cross in price lately in recent years, and they are a Blue Cross company, same networks, works the same way. But then if you have only one employee, you may provide an individual plan, but you provide it as if it were a group. You can't buy a group coverage for one person, one employee. And so you may do that when you've only got one employer, one employee working 30 hours a week or more. You may do that on a tax-free basis. And then the other possibility, and I wanted to mention this is where I'm going with this. The other possibility is if you don't provide health insurance, you can't provide health insurance. Many of our churches have just kind of said, hey, we can't do it. We can't afford to do it. And so if you don't, you may provide an HRA. And that HRA, health reimbursement, would reimburse them for them buying their own individual coverage. And you may do so tax-free. You've got to have a written plan. It can't be from salary reduction. You've got to do it for every employee the same. And every employee who works 30 hours a week or more. You've got to treat them all the same. And you may do that. And that is a good option. It's a really good option for those churches that feel like they can't provide health coverage, but they want to do something. And that is a good thing that you should be doing if at all possible. And that's kind of talked about on this page. Yes?
We do provide group health insurance plan for the church pays for the minister's coverage.
Yeah.
We offer it to any other employee.
Okay.
Is there a way, it's so expensive, is there a way to give them a break? Can that be pre-taxed or?
For who?
For
The employees?
By salary reduction.
You really need to, none of these ways are by salary reduction.
Yeah.
You might want to do some restructuring, and I would advise you to talk to somebody who's in the benefits business. We used to use Task, TASC, and their website's Task Online. I think the company that we're using now is EBS, I think, Employee Benefits. But you can get them to help you write a proper document. It's got to be properly written. It can't be from salary reduction, and you can provide for your employees some kind of a reimbursement or things like that. How many employees do y'all have?
Well, with part-time and childcare and everything, 50.
Okay, but you don't meet the 50 in terms of full-time equivalent. All right. Here's what we did at Heritage. The ministers were receiving full coverage, and the reason they were receiving it is because it goes back to the old package approach where you took your amount of money and you divided it up the way you wanted to. And so obviously, and back in those days you could do it, but These days, it doesn't make any sense. It doesn't help you tax-wise. So our ministers already had full coverage. So what we did is we said we're going to give everybody health insurance. I mean, everybody who works 30 hours a week or more, going to give everybody health insurance. We're going to charge some amount each month. And I don't know, maybe say $100 a month or whatever. And here's what that did. We had some daycare workers who qualified for Medicaid, or I think, anyway, they qualified for benefits. And so we didn't want them to take the insurance unless they really wanted the insurance. So that's why we charged them a little bit. And we charged them some, we charged the pastor, ministerial staff, all that, charged them the same thing, and then we gave them the same coverage. Then we gave, for the ministerial staff who were already used to it, we bumped their pay to be equivalent, and then we gave everybody, ministers, non-ministers alike, a chance to do this agreement. I want you to take money out of my check to pay for my family coverage. And I want you to do that on a pre-tax basis. And now why you'd ever want to do that on a post-tax basis, I can't fathom. But you do a little form. You got to have a written plan to do all this stuff. But anyway, we made it so that the ministers were not harmed, and the people who didn't have a benefit now had a benefit. And had a benefit they never had before. And so that's a good way to do it. You need to get with one of these benefits companies, HR, human resources companies, and get them to write your plan and develop your plan and help you to do it where it's properly done, because you don't want to mess with the Affordable Care Act. The penalties are something like $100 a day per person that you've messed up on. It's something atrocious. So you want to get with one of those companies to make sure you're doing it right. But that is a possibility. All right.
So what were you saying, the 30 hours of?
30 hours a week or more is the definition of full-time for the Affordable Care Act.
So from what we've read, it's the 30 hours of the 130 per month.
Yeah,
Which averages
yeah.
out to more than 30 per week on a 4-week month.
But it's not a 4-week month. I mean, every week is 4 weeks plus. 4 weeks would be 28 days. So that would only cover you for February. So every month is at least 2 more days, and that's why they say 130 for the month. They're not dividing it by 4 weeks.
They're not divided by the work days, or divided by the whole 30-day period.
I think that's right. I think that's
Yeah,
right.
'cause I did read it
I think
from
that's-
January 1 to, if it is February, it's gonna be from February 1 to the end of the month, so it depends
Yeah.
on your month you're in there, so.
But for simplicity, I'd just say everybody who works 30 hours a week or more. Now, you work that consistently. It's not that happens once in a while. But you work 30 hours a week or more, and we're going to treat all those people alike who work 30 hours a week or more regarding health care. Now, regarding your other benefits, you can divide them into ministerial staff, support staff, daycare staff, things like that. But as far as as far as health care, you really should treat everybody alike. Now, if you hear Guidestone, they might say you can do classifications of employees regarding health care. And I think that's true of Guidestone Insurance because it's not a typical plan, it's a church plan. But the easy answer is treat everybody alike if they work 30 hours a week or more. And if you've got less than 50 employees, you don't have to provide it at all. But if you're going to provide it, you really should treat everybody alike. That's the easy answer. Okay? Other questions? All right. Then, I wanted to get to the minister's W-2. This ordained ministers should be paying their own SECA, self-employment tax. And that's, if you want to know that, if you've got a minister saying, why can't you do FICA? It's IRS code 3121 B8A. So there you can look it up in IRS code. Now, on bivocational pastors, could all my money be housing allowance? Yes, that is possible. And if all of it is housing allowance, do I need a W-2? No, not if 100%. You just need a letter from the church saying you received $20,000, 100% of which was housing allowance. And then if the pastor is the only employee, you've got to and does have some money other than housing, then you've got to do a W-2. And if you've got other employees, now we've got to do a 941. And we've got to do that. And then a W-3 and an A-3. W-3 is your reporting a summary for the year and of all your W-2s. A-3 is the same thing, but for Alabama. And if you just got one employee, it's real easy to summarize. So the ministry assistant's W-2 looks like just anybody else's anywhere. It looks kind of like this. You got stuff filled in pretty much every box. On the minister's W-2, let's look at this one. This is one thing I wanted to get to today. For the minister, this minister makes $25,000. This is page 26. Page 26. This is that example. This minister makes $25,000. Out of that $25,000, he wants $15,000 to be housing allowance, and he wants to put in $2,000 into his retirement plan, and the church puts $1,000 into his retirement plan. And in addition to that, in addition to that, the church provided some life insurance. It exceeded $50,000, so there is a taxable amount, and the church looked it up at the tax tables, and that taxable amount is $12. Now, if it's $50,000 or less, you don't have to report anything on the W-2. But so he did have group term insurance that was in excess of $50,000. So there's an amount on the W-2. So box 1, we started with $25,000 minus 15, that's 10. And then he put $2,000 of his own money into retirement, so that makes 8. So $8,000 went in box 1 of the W-2. In box 12, you've got the $2,000 came out of his check to go into retirement. So that $8,000 plus $2,000 is 10, plus the $15,000 housing allowance made the $25,000 that he started with. Then I want you to, the $8,000 also goes down here in box 16 with state wages. Notice that boxes 3, 4, 5, and 6 are always blank. 3, 4, 5, and 6 are always blank on an ordained minister's W-2. If you end it, like you run it through your computer program and stuff, and you end up with money in box 3 and 5 on an ordained minister, there's something wrong, and you need to fix it because that's a red flag. So now the only exception to that, let's say that there's a minister who gets ordained during the year, and so you show some with FICA and some not. Then if you do that, you need an explanation in box 14 that he was ordained June 1st or whatever. But for an ordained minister, this is what their W-2 looks like. And then in box 14, which I've covered up here, box 14, you may put housing allowance $15,000. And notice that I said may put it there. You don't have to. And that's the IRS language. May be put in box 14 labeled housing allowance. Anybody have a question about a minister's W-2? Everybody all right? Okay. For your 941, the key here, and this is also on that same page, the key here is that for a non-minister, for both the minister and the non-minister, you're going to put their quarterly wages in box 2. You're going to put how many employees do we have? This particular church had a ministry assistant and the pastor. And so how many employees do we have? 2. How much wages have been for the quarter, this amount, and how much federal tax has been taken out. That particular minister didn't do federal withholding. And then when you get down here to box 5, you're not going to include the minister. You're not going to include the minister. That box is for calculation of FICA, Social Security taxes and Medicare taxes. And notice here that you are accounting for all of it, both the person's half that came out of the check and the church's half that's going to be added to it when you do your 941s. And that's going to be the total amount for Social Security and the total amount for Medicare. Other than that, the 941 is the same as it would be for anybody else. But it's kind of weird for us because the pastor's wages are included. He is an employee, box 1. Number 2, his wages are included there, but they're not included when you get down to here to box 5. One more thing I wanted to show you. There are additional steps. They're in your book. You've got summaries such as the A3 and A6 is a monthly if you're required to do that. A1 is Alabama's corresponding 941 is what that amounts to. But then you do your W3 for your employees, which is a summary of your W2s. Now, for a 1099, you use the form 1099 NEC. Don't use the miscellaneous form. NEC stands for non-employee compensation. And so you use the form 1099 NEC, and you've got to do those forms for anybody you paid $600 who's not an employee, and you pay them $600 for the end of the year. Always obtain a W-9 for those people, so you have that on record. You've got their Social Security number. You're ready to provide the 1099. Make sure that you do that, and you really should do it before they get paid. After they get paid, you're going to have somebody that's going to be hard to track down and get that information. So even say, I've got your check in my hand, but I need for you to fill this out first and get them to do that. A 990T. Now, the 990 is a tax return for nonprofits. Churches don't have to do that. But you might have to do a 990T if you have income that is non-related business income. Like there's a church that has a coffee shop open to the public throughout the week, and they're near the college campus. They have to do a 990T. There are some churches who have a cell tower on their property, and they get the money from that, and they have to do a 990T. Things like that. But most of us don't have to do the 990T, and we all don't have to do the 990. One more form if you have a school or daycare, you should be filling out Form 5578. It's just a non-discrimination form. You're attesting to we do not discriminate on the basis of race concerning our children. And that's all you're attesting to. And very, very easy. If you're on a calendar year basis, it's got to be done by May 15th. But you should be doing that form. All right. We've gone through a whole lot of stuff. Anybody have any questions today?
If you don't put the housing on the W-2, you have to give them something in writing as to what they receive for housing.
That's what we recommend, that you do it on church letterhead and tell them what they got for housing. That's what State Board of Missions does. But you may, if you want to, you may put it in box 14 of the W-2. And absolutely positively make absolutely sure it's not in box 1 of the W-2. Because if it is in box 1 of the W-2, the minister can't fix it. You've got to do a corrected W-2. And you've got to do, it is an exclusion from income, and the church has the authority to exclude it. The minister doesn't have the authority to exclude it. When I'm retired and I'm receiving my housing allowance from Guidestone, Guidestone has the authority to exclude it. I don't have the authority to exclude it. So make sure your housing allowance is done right. All right. I'm going to have a prayer, and we're going to dismiss a little bit early today. But I'm going to be sitting up here at the front, and if anybody has any questions, I'll be glad to. I'm not going anywhere. We've got staff meeting tomorrow, so I'm not going back to Huntsville today. And so I've got time. If anybody has any questions, just let me know. And for those of you who are online, please give me a call if you have any questions. And my number is 334-549-1383. And just give me a call if you have any questions.